Good morning, everyone. How you guys doing today? One. Oops. Doing all right. Terrible. We haven't MOASSed yet. Sorry to hear that. Are you ready for SPX to rip to 4,000? Man, I did not like the. I did not like the data this morning. SPX is recovering a little bit, but that was a lot. PCEs, like PCE estimates are up, which is probably not good for PCE tomorrow. And GD, like the economy is just expanding, which is not what the Fed wants, right? Puts, I mean, eventually, yeah. Fubo had some news last night about getting on Amazon's like new live TV platform, so that was neat. Freevee or Free TV, I don't know what the fuck it was called. I kind of joke, but I also expect longs to find an exit for their calls. It's true. There's definitely some interest in that. We get SPX open here. The U.S. economy is so difficult to slow down. The effect on labor markets seems to be pretty good. Futures are pushing up a little bit. How much? Man, I don't trust that. Shit. Should I hold my straddle into the Powell speech or just reposition it in the morning? Oh, it's not even a straddle, it's a strangle. Ugh. I'm gonna blow J-Pow before his speech so he's in a good mood. Good morning, Sean McDanry. What pathetic volume opening candle for GMA? Yeah, that wasn't much. Uh, dropping into the rising market? More like slowly rejected market. SPX is going to be fucking boring today because everyone's going to be positioning for JPAS speech. You think he screams Volker when he's finished? We'll see. I don't know how he can be any more hawkish than he was at the like November rate decision, right? Short of just like screaming the economy's fucked. Everyone pull your money out of the banks. Like he really used up a lot of his ammo. Are Jan 100 still a decent IV play for Upstart? They've been pretty okay so far. Mine are still up, I think. Yeah. Hold on. Who told me? 904. Expecting a delivery today. Any thoughts on the railway strike negotiations? There's one every like 9 months. They always resolve themselves. I'd love to believe there's more of it, more to it, but I don't think there will be. Would you buy Upstart Jan 2100s right now or buy more Theta? Um, I probably won't buy more Jan 100s because the ones I have are up like 50%. I have quite a lot of that contract. I think I have like 200 of them. So yeah, I'm probably not gonna buy more of those. I might buy like 80s or something, like try to fill in the gaps. The market's breaking kind of up towards yesterday's gap. And I don't trust this morning run. I want to set some stops on my strangle here. This looks weak as shit. Getting like a little bit of momentum, but not much. Nasdaq's doing kind of okay this morning. And oil's bouncing back a bit. Maybe it's a little stronger than expected. Dixie's down. Dixie's down quite a lot. Let's see where the gamma flip point is for today. Yes. Gamma neutrals at 40.36. Delta neutrals at 39.46. Okay, so we held above delta neutral yesterday for the most part. To bounce off delta neutral? Such a tight range though. Bum, 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 bum. Oh, not skew. Gamma. Okay, above 39.60 doesn't look terrible. Positioning's a little more advantageous today, but we still need to break 39.75. 39.77. Yeah, there's a pullback. It might be a little more encouraging. Let's see how low that drops. Retest 39.58. I was just gonna pick up some momentum. Yeah, I think this is gonna drop kind of hard. Oof. Getting the fuck shorted out of us. Take a look at Baba. I'm up 80% of my calls. Do you think a test of 90 is possible? Let me see. Is my Baba chart anywhere? Baba. Baba. There's gonna be really hard resistance at 85.31 and then 88 after that. Both of the 85.31 is a really strong resistance, so watch out for that. I would expect could be a rejection at that price point. Yeah, volume's not very strong on this. I do think it'll continue to push up throughout the day, but maybe a little weak going into that first test. Oh yeah, I was right to be extremely cautious. Yeah, this might pull back all the way to like delta neutral again here. Doesn't look like they're covering today. Not yet, no. I'm down 0.43% on my Upstart shares. I'm financially ruined. I'm so sorry to hear that, Carl. Before you get too deep into the trading dungeon, you haven't equipped your Greek order entry shield yet. Oh, they're in the fucking daily. I don't want to copy and paste these every day. It's such a pain in my fucking ass. Also, their usefulness intraday is very questionable. Unless we're running. Or you're planning on selling CSPs or CCs. I don't know what the fuck else you would use them for. Alright. Is it gonna work? Okay, there we go. We're gonna watch SBF stream today or watch Seinfeld reruns instead. Who the fuck is SBF? If we don't run today, then no flex. If we do get a run, it's still a GoPex. That's a reasonable assumption, yeah. Interesting. Okay. That looks a little bit better. Okay. Well, I found support. That was a big fucking gap up. Holy shit. What news is out now? There's more economic data today. 9:45. Okay, so PMI isn't out yet. Jolt's job openings are at 10 a.m. All right. So just maybe just a little volatility here, but nothing too significant. Short side stop loss. That was a big gap up. Is this on fucking Hank and Ashi? Why is it showing a gap there and not here? All right, whatever. Netflix straddle. For what? For earnings? I know you already have puts on SPX to hedge. Did you wait until the speech to open puts on SPY or open now? IV might go up on puts and calls as we move into the like middle part of the day. I think his speech is at 1:30 Eastern. I don't know. Like anything that happens today, I'd be really cautious of because there's just going to be tons of positioning around the speech, right? And we're already kind of in an ideal range for them to straddle with like where we're trading right now. Gamma is pretty flat both to the down and upside, right? So this is like an ideal price point to straddle at. I don't think we move up to the gamma flip point before they start positioning. I'll know a little bit more in like what 4 minutes, but yeah, right now I would say that we're gonna be fairly range bound. Powell speaking at 1:30. They're boofing Upstart hard. I don't know if they're boofing. It looks like they're just shorting on all the downticks in the market. The market's not really rising. It's just trading sideways. Or maybe remind chat that illiquid equals able to gap down without much money. Yeah, not all volatility is realized to the upside, guys. Neo is a rocket. Is it? Ooh, Docu's back in my buy range. I want some more of that. Looks good. BTU up again this morning. Okay. Rivian's rocketing too. Yeah, so Bob is moving into that test right now. It's looking a little stronger. Kind of like that. Uh, Okay. There it goes. Bum, 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 bum. It's a bit like out of control there. Looks pretty good. All right. Isn't Neo in the basket? Yeah, a little bit. Thanks to the valuation idea of not investing in Zim rip. What's Zim doing? Halliburton's up. No, down. Ugh. Gross. Yeah, not a great company. PMI missed pretty hard, but I don't know how much surveys matter. Stagnation for today? PMI. Oh, the Chicago PMI? They don't matter a lot. We'd expect manufacturing to be contracting during this period. That's bullish, right? Upstart looks like toast. It looks like they're shorting Upstart very hard. Or doing their best to short Upstart very hard. Don't think they got a lot of liquidity left on that one, though. Let's see something here. Mm-hmm. It's not really normalizing in extended hours. That doesn't look particularly great for them. Six. Hmm. Is that behaving so weirdly? Sorry, 1 second. Should probably set some stops here on Baba. $9.53. If Reg T extension. Okay, sorry. Baba to 100 again? I don't know about that. It's definitely moving up pretty hard, though. Close position, order entry, stop. 2025. I don't know, Baba kind of looks like it's just gonna keep moving here. It's approaching the $88 resistance, which would be the next really important one. I don't know if that's gonna slow it down at all. The momentum's pretty good. Why is Chinese EV rocketing today? I mean, Hang Seng is up quite a lot over the last 2 days. It's probably a big part of it. SPX flat, not a ton of volume. VIX up over 1%. Yeah, I mean, that's kind of problematic. Gives them a lot of opportunity to offload internalization and short the downticks. Baba's still kind of just ripping. Yeah, I don't really see any sign of this slowing here. Maybe it's peaked. It's so hard to say. Oh. I've got my stop pretty close there, I think. So either it keeps breaking out more here, which would be kind of ridiculous. Sorry, I kind of wrapped up in this Baba position that 100%ed out of nowhere. XG expansion, where buys do it open or anytime today? Buys do it open today. But that doesn't mean they can't use dark pools just like they would for OPEX. I think there's a way we could be getting liquidity in a way we can't see so that they're actually more liquid than it looks. Oh, okay. I got stopped out. Bob is going to pull back a little bit here. I wonder if a re-entry is in order. No. I don't think. $30. Okay, yeah. So rejection here. I might re-enter it a little bit. Hold on. I want to keep that up on screen just because I want to watch it. How's Fubo doing? $2.70. All right. Do you think there's any way they could be getting liquidity in a way we can't see? So they're actually more liquid than it looks, therefore no covering needed. No? No, there's no way to hide it. Liquidity creation's pretty obvious. They get liquidity synthetically, which is likely to continue. Gotta love unrest in China, so the market there rips. Well, there's other reasons their market's going up. Upstart like trying to keep a greased watermelon at the bottom of a swimming pool. Yes. I can't say I have a lot of experience with attempting to do that, but it sounds difficult. Hey Greg, do you see a December market rally happening, or do you think we're already close to a local high? Thanks. I mean, we're kind of close to a local high, but that doesn't mean that we can't get a rally into December. Is volume starting to trend up here? It's got to pull down at some point, right? Yeah, I'll just try to be patient with it. Neo going to 50 again? What's Neo doing? I was supposed to look at that, right? Hold on. Oh, yeah, I don't think so. It's up $2. China warns of slump in vehicle deliveries after Q3 loss widens. That sounds super bullish. No, Neo's not going to run like Tesla. I do think it has more room to run. But it's probably going to pull back here. Yeah. It looks like it's about to pull back a little bit. I think a lot of these things are just moving up because hey, there we go. SPX back to the 39.50. Jesus. Is that a bear trap? I don't want to buy a 39.50 call now. Jesus Christ. Those aren't cheap. Holy fuck. Ivy's so high on 0 DTs. Fuck that. Well, scalp Neo? Neo greater than Baba? I don't think so. FTD data's out. Ooh, cool. Jolts came up lower than expected. That's a good sign. Crazy amount of 90C weekly OI on Baba. Yeah, but I think a lot of that might be sold. Everything has to be such an exaggerated move. I mean, that's just SPX is very slippery. there's there's no like underlying, right? So when you get like options sell off, price slides really fast. Why the sudden SPY SPX drop? It might have been the job news. Could have been a reposition. Looks like maybe a reposition of shorts. Why isn't GM the max? GM is the point at which gamma starts to expand more rapidly. And so 10 to 15% from there, gamma starts to become unstable and collapse. GM's also not a static number. It changes throughout the day. If something starts running, people start buying calls on it, right? And they buy them out of the money. More and more people buy calls out of the money, and that continues to raise gamma max. You keep mentioning Neo. Is this because Matthew Perry slammed Keanu in his memoir? Not no. No, that's definitely not why. All right, let's see. Positioning on SPX is about the same. More 39.50 puts, more 39.85 calls. Looks like those might be the strangle points. Hey, I sold at the top. What a perfect grab on Baba. Let's see. All right, so 39.50 puts are kind of loaded, but if it breaks up above 39.50, it's, well, 39.60. So it really needs to break 39.60, and if it breaks 39.60, then it's got some runway. All right, let me look back at Baba. I might be able to re-enter this. Ooh. 1 minute? Nah, there's still some more downside. This is interesting. Why are these doing this? All right. Last 3 dates on Upstart, failures were over 1 million. Sounds about right. That would have been going into its reg show inclusion, which was on the 14th. So yeah, we should have the data all the way into the reg show inclusion. That's what we expected. That lines up with at least our prediction of where the fail to volume ratio was falling in as it went into reg show. It gets worse after that. C plus 35 for 1114 FTDs on Upstart is on the 2nd of January. What do you think about it? I don't really know how much that matters. Those are MMFTDs, so the 35-day that probably won't even be realized in the 35-day window. I guess it'll depend on if we're on forced settlement at that point or not. Don't forget everything's going to be offset because of reg show. Any dip sub 18 comes with buying. Did we find the buyback price for Upstart? Possibly, yeah. I mean, that's about half of their current cost basis on their share buyback. I think their current cost basis is like 33.90, so pretty close to half. All new high fails on the 9th, 1.87 million. Cool. Do underlying SPX stock prices mostly determine SPX price? Or do SPX options mostly determine underlying SPX stock prices? Trying to figure out which tail wags the dog. You know, theoretically, the options should never wag the dog, but in a market as illiquid as this one, they do quite a lot of wagging. I'll have charts once stocks are updates. Okay, cool. Matthew Perry is insufferable. I really don't know that much about him. Yeah, I don't think Bob is done slipping. This doesn't seem like a great entry. I try to watch Neo too, but I'm not really set up for it. I'll just say that Neo's probably going to track with Baba. Ooh, Dole's getting cheaper again. That's fucking exciting. Oh, I can't wait to buy more of this shit. Dividends coming up. Maybe that'll be my buy-in opportunity. Interesting. Okay, so yeah, SPX needs to break the 3960 level. But I'm not going to trade it because Ivy's fucking ridiculous right now. And I think everyone's strangling it between like 3965 and 3950. So, yeah, I probably wouldn't trade the SPY or SPX until after JPow's speech. Are we going to watch his speech? We should watch the speech. Oh, I'm sure they bought back shares after earnings, but who knows how many, right? We don't know how many they bought back. Volume wasn't extremely high through that period, you know? Like the 3 days following earnings, there was like what, 30 million volume? I highly doubt they bought all of their share buyback at that point. They might have, but I really doubt it. If they did, the shorts are completely fucked. Um, Also, like the liquidity levels don't really indicate that a lot of shares, like liquidity didn't really dry up during that period. It dried up a little. A few days later, it became worse. Like liquidity got a lot worse by the like 21st of this week. There could be some offset in the fails if they bought in, but I don't think it'd be that many days. You'll know how much they bought back probably at their next earnings. Through fails and Quantcord and the usual channels. Thanks, Tomic. What are we looking at here? Okay, so yeah, Upstart starts failing big on the 7th. All the way into its reg share inclusion on the 14th. Uh, Based on the liquidity data, I think Upstart fails spike after that point. Upstart ETF FTDs are pretty high on the 18th. Same for GME. Fubo ETF FTDs probably aren't even worth looking at. Man, they got fails so low for like 4 days on Upstart, and they just rocketed back up again. GME FTDs still look like garbage. Ugh. What's your price target for buying Dole? I mean, I'd like to buy it below 863. I don't know. I don't know if I'll be able to, but I'd like to. Is Bobby gonna get another rally, or is just the momentum just dead? I think momentum might kind of just be dead here. Futures look like they're gonna stabilize a little bit here. Maybe another pop on SPX. I don't know. There's probably just not enough volume to tell, actually. Neo. And Neo's kind of petering out, too. It's 1277. Definitely a lot more interest on Neo. Kind of starting to turn around. I'm not sure if I trust that. As soon as you said I'm not going to trade SPX, red candle, market manipulation. It's just too risky for the price of IV right now. I still have my strangle. I'm stopped out of about like half of it. I'm gonna carry the other half, uh, like into Powell's speech, I think. So if no upstart settlement today, it would have to occur anywhere between 12.7 and 12.21, right? It can start occurring sooner with forced settlement. There's no period of time because of reg show. There's no period of time you can't cover. If you leave anything open, it could start running. It's shitty, I know, but it's true. Hmm. Yeah, it looks like Neo's gonna push up again. How much call interest is at 13? 9,000 contracts. What's the float on Neo again? 14.34 million. That's a big fucking hedge. Can they stop that? It's gonna be tough. And I used to own so much of this company. Fubo gonna go through 3? Is Fubo ripping? No, Fubo got fucking slammed with the market drop. Their failure to volume predictions still show that Upstart is failing at greater rates? Shouldn't we be off reg show anytime soon? It sounds like. Why do you think we'd be off reg show? Oh no, we shouldn't be off reg show anytime soon. I think we're definitely gonna hit the forced settlement period. Sorry, the way you worded that was kind of strange, but yeah, yeah, it doesn't look like they're clearing any sufficient amount of fails. Our current liquidity is significantly higher than the period in which they got it off reg show last time, and above the failure period that led to the relisting onto reg show. So we're still failing like a fairly significant amount of volume every day. What's up, Sploosh? Thanks, man. XPEV is the biggest mover of the Chinese EV bunch right now. Does anybody know why Chinese EV stocks are moving, or is it just all the Chinese stocks are moving? Is there something specific about the EVs? Because like Baba's probably outperforming, right? At least in like turnover value. Yeah, so see how we're seeing that really strong support at well, in futures there's really strong support at 39.50. I guess on SPX that's probably what, like 39.45, yeah. So we're starting to drift to the downside. This would be a downside drift to the delta neutral positioning, which means that participants are taking a bullish stance on Powell's speech. Been a minute, been lurking, but out of the market for a while. Looking to dive back in half of this week. Glad you're still here. What's up, Walker? Welcome back, man. Been a while. Papa Powell will advise the only way to avoid recession is upstart Jan 20 calls of any kind. Yeah, that's not going to help with inflation if they print. How hard is Upstart going to squat when the FTDs are over 50% of the current daily volume? I don't know if I've ever seen failures get that high except on like Revlon. I don't even know with Upstart's float if that's possible. XLF is the real dumpster dive. Hmm. Good morning, Mike. Sorry, I know I'm kind of like distracted this morning, but I'm just fucking around with shit. XPEV had earnings. Okay. Even HKD doing things. Definitely all Chinese stocks. Yeah, that's kind of what I thought. Baba reentry is bonerific. Thanks for pointing out Big Bad Baba. Yeah. I mean, whoever pointed it out to me. That it just looked like a nice setup. Okay, first off, Neo's not going to run 40x. Um, it doesn't matter if it has massive gaps to fill to the upside. It's got a low float. That's the biggest benefit of Neo. And I'm pretty sure that that's just the float on the like the US security. The the one in the one that like trades on what is it, Shenzhen is got a much larger float. Please explain the different ways you use ES1 versus ES2. No. Is there a rule change that could prevent Upstart from squarting? There's a couple rule changes that can prevent it from squeezing, not squirting. I'm just trying to think through any bear cases. Volgavana squeezes are significantly more difficult to propagate in the current environment than they used to be. Neo has huge OI for Gen 23. Yeah, the OI is really compelling. I see it too. I'm pretty sure I have the. Yep, I have the Greeks for Neo as well. Gamma Max on Neo is at about 1461 right now. Vega Neutral's at about 0. Call buying's been picking up. Ivy was down pretty far this morning. Vega exposure, where's... That's non-existent. I don't know what the fuck delta neutral is, though. That's weird. I don't have a delta neutral value. What's a square? Uh, a rapid upside move. Let's put it that way. Is there a rule change? Neo is a huge OI for Gen 23. MOASS, recovery. Nice recovery into the middle of the day. I don't think that's MOASS. I think Neo's finding stability here. It's gonna need some. You know what? If SPX bounces, that'll probably give enough momentum to push up Neo, but otherwise it looks like they're gonna fight a little harder for $13. I think it kind of just needs a little bit of market pressure. The dropping market's really not helping it right now. And I have no idea what its primary ETF is. Hold on. Forget the name of it. ETF owners. It's IEMG. Jesus Christ. So many shares. Does it have 1 billion shares? Is that what it is? There it goes. Looks like SPX is actually just being shorted. In a high potential recession, are you gonna pile up on stocks? If so, what stocks are you planning to grab? Well, a bunch of them, but I'm not gonna tell anybody because I don't want people front running me into them. When you say market participants are anticipating a bullish move from the JPAS speech, how bullish of a move are they anticipating? It's not necessarily that they're anticipating a certain degree of bullish move. It's just that, so delta neutral positioning, strangles at 39.50, straddles at 39.60, or sorry, strangles at 39.65, 39.50, and then straddles at like 39.60. right? And they're pushing down. They're pushing to the downside of the strangle positions, right? This is like pretty consistent, steady shorting. So that means that they want to be prepared to close puts. If something is gonna take, if market participants are betting on a bearish outcome, they'll generally push to the upside, right? So we see a lot of capital coming in on like 0 DT in the money short positions on SPX, pushing down below these big straddles. If they push to the upside, it means they want to close their calls first. Usually, it's an indication. It's not like 100% true every time, but it is an indication. Sorry, I saw the Ko-Fi that I missed. Hey Greg, if you have a chance, could you take a look at FVRR and tell me how it looks from a TA standpoint? Is the trend reversed? All right, let me take a look. Hold on, I gotta find. Let's create a new one. FVRR. The uptrend? Fuck, that's tough. This looks like downward consolidation into maybe another move up. I don't know what time frame you're looking at it on, but maybe it pushes for the gap at like 31. I still think there's some more downside to this, at least on shorter time frames, like on the 1 hour. On the 5 minute, it looks like it's picking up a little downside momentum, but on the longer term time frames, the consolidation looks kind of bullish. So it maybe like a small pullback. Shellfish. Word on the street is you have wooden paneling in your apartment. Yeah, a full wall of it. I think it's oak. It's fucking ugly. We all know that you're gonna pounce in with your buyout offer for a Mexican brick company. No. Serious question, you always mention front running. Does the capital available for this channel's members really have an impact on your position, entries, and exits? Sometimes, yeah. I've gotten like fucking blown out of like options contracts just because I looked at them on the stream. Like from where they were a good entry to the point where they were just complete shit. Since my upstart December 16s are down 80%, I couldn't buy very many Jan 20 with the money left in them, so I think I'm holding them and just buy additional Jan 20s. What do you think? It's up to you. It's risky though. Uh, even though most of the capital is gone, the capital redeployed could be more profitable than just losing the other 20% of your money, right? Why should you not buy Neo and it run to 1,000 like Tesla did? It's not gonna run to 1,000. What the fuck is wrong with everybody? It's not Tesla. They're just having a fucking pump because the Chinese indices are up overnight. The country's in the middle of like political upheaval. Like it's not like a good buy and hold right now. I saw an E-Trade having issues, and they click on gains and losses within their portfolios. Trying to figure out if it's a system issue or a posty issue. Thanks. I don't know, but yeah. If anyone is having issues with E-Trade, let them know. Triple top on Upstart, 1838. Sure. But I don't think it's really relevant. Who's Lauren from Discord? Lauren. Laren? It's He's named himself after his car. Does your failure to volume prediction still show that Upstart is failing at greater rates? Yes. I answered you the first time you asked me that question. Makes millions off YouTube, still has wood paneling. I don't make millions off YouTube. Not even fucking close. Also, I don't see the point in paying for like a nicer apartment. Like, what am I gonna do with it? I don't really care about the aesthetics. I like my weird, slightly walled off apartment on the back side of my building with the views of a brick wall. It's cheaper. I don't know what, pay fucking $2,000 a month so I can see the outside. Worthless. No, that's his name. His parents knew. Chipotle is publicly traded. I don't know if I'd buy puts on it, but it is publicly traded. CMG is the ticker. I don't have a Prius. I have a hybrid. Oh shit. Okay, Neo's fine. Oh, I can buy more of these. I have 105 Jan 40 calls for Upstart at a 351 cost basis. Good cost basis? Yeah, not bad. You're a little bit up on them, I guess. 10 cents a contract. It's pretty solid. Is Neo turning around here? It's either going to turn around or fall off. Some of the longer time frames are kind of blown out, but yeah, it should be kind of bottoming. Like I said, it needs some market pressure. We may not see a big move on Neo till after like the Powell speech. GME's still getting fucking slammed. All hybrids are Priuses. Okay. Interesting. I'm buying one put contract for every time I have to visit the restroom I may need to apply for margin at this rate. They're not cheap. Has Tesla been strong the last few days based on OPEC's closing extensions? Tesla's been doing pretty well for the last like week. It's been moving up at a pretty decent pace. Where did that bottom? It's right on resistance right now. Here at like 185. But if it breaks up, it can test like 193, maybe 199. Wow, my Tesla short play from like 2 weeks ago that I forgot to enter did really well. Oh well. Adderall came through finally. Can you tell? You seem excited. My parents named me Bridge because they knew that's what I'd be living under. Nice, Hazy. The volume on GME being so low, I expect a lot less shares available to borrow than there has been. Why am I wrong here? Have there been a lot of shares to borrow? What, like 600,000 this morning? Don't forget that the stock split. They haven't covered anything. I have a theory. J-Pow sets off the upsquartening after his speech. I like your theory. Does the fact that they continue to short Upstart despite forced covering coming Friday mean anything? Like, they expect forced covering to happen, so they're shorting as much as they can in anticipation, in preparation. Yeah, I mean, I'm sure at this point they're aware that they're not going to be able to clear sufficient fails. Are you holding on to your December Upstart calls? Not after today. I'm closing them. I'm gonna move them out at the end of today. In October, Upstart had the same FTDs as it does now, and this cleared without any rise in price by the 1st of November. Was this because they found liquidity off reg show? If so, how without a rise? Without any rise in price by the 1st of November. There was a rise in price. Upstart went up a bunch right before they got it off reg show. It went from like 21 over a few days. It went from like 21 to like 26. But there was a rise in price before they got it off reg show. They also did, the bare minimum amount of covering in order to dodge forced locates, right? Hence why we were back on reg show so quickly. It's funny that the JPOW speech will end around 2 p.m. or the afternoon large dark pool dump. Is that on purpose? Could be. I doubt it. Is there any chance shorts are simply biding time, hoping for a hawkish JPOW to ease covering this afternoon? It's possible, yeah. I hope Upstart covering is consolidated into a single 50% candle. I don't think you hope that. First of all, it would halt. Second of all, it would be very hard to exit positions if all the price action occurred in one candle. You mentioned IV was too high. Better to hedge with the same expiration? Probably, yeah. Because you want it. Well, you at least need to get away from the IV bump, right? So probably what, like 5 days out, 3 days out. Let's see what the 5 day expiration looks like. Yeah, about 5 days out to get away from the near term IV bump because the like 0, 1, and 2 DTEs are even the 2 DTEs like the Friday expiration are like 31% IV. Probably gonna jinx myself, but think I'm getting better with CCs and CSPs. I'm starting CSPs stay green even when they go in the money. That's called theta decay, or it's because of IV crash. Probably both. Why wouldn't shorts take the longest possible extension and hope for a market downturn or crash by then? Volatility shorts don't care if the price goes up, right? They just pay the cash to the ETF. The ETF might want to take the longest possible extension, hoping to be able to buy back cheaper, uh, profiting off rebalancing their NAV. But that's another story. It doesn't mean they'll be allowed to. It's not like you just go into the extension store and pick the one you like best. Once you start getting into like the 4210 and 15C3-3 extensions, there's a lot more oversight. So you have to like attempt, like if you're trying to claim that securities are unavailable to purchase, you have to show like attempts every day at purchasing the securities through market orders. Like you have to show that you're failing to purchase through a market order. It gets a lot harder to manage. Have you ever pre-rolled? Yeah, I've done that. You need dork or trash to ask before he'll see it. See what? Check his Discord inbox. Dear God, what have you done? I'll find a use for that. $1.69 billion shares outstanding, but its free float is 14 million shares. I hate Chinese companies. Um, Wait until the end of the day. How many financial regulations do you think are in place because it was abused and profited off on before put in place? Almost all financial regulations are an afterthought. How many loopholes are still open? Thousands. New regulations just create new loopholes. The best part of losing margin has been the excitement of discovering how much settled cash I'm going to get to play with each trading day. Like when my wife takes my wallet for the weekend. Regulatory arbitrage is definitely a thing. Yeah. When JPOW speech, 1 p.m. Eastern? I think it's 1:30. Yeah, 1:30 p.m. Eastern. And Cook is speaking at 12:35, then Powell after that. Good time for spy calls. Risky, and now they're overpriced. How come volume spikes on ES2 daily interval are so massive and unique when compared to its regular volume candles? What are their significance? It's probably just like open volume. Are you straddling the speech? Sort of. I have a strangle in place from yesterday. Well, I have half of a strangle in place from yesterday. I took profits on it a little bit today. Dixie went parabolic. Yeah, it came up pretty fast. What's going on? Why? Yen dropping? If Upstart did run, would you expect the same amount of volatility, 20% up and down, as Cosm? Or is Cosm different because no options chain? Cosm doesn't have implied volatility because no options chain. I think you said something about price of SPX being down because people are betting that Pow's speech is bullish, so they can unload all the puts before the actual speech. Yeah, we're seeing a drift to the the put side of the delta neutral positioning built up around like 39.50, right? Which means that they're prepping to close puts first. Usually. I only now if you see a skew in positioning, then it's bearish when you see that happen, right? So if you see that like put positioning is significantly stronger at the money than call positioning, right? So like the delta neutral positioning is put side favored. That can mean that shorts are pushing their puts into the money to ensure that calls will have to capitulate out of the money if the news is bearish. But right now the positioning around like 39.50 is fairly neutral. Shorts are scared to go below 18 because the buyback at 17. CSP seems like free money. I've made a lot of money selling CSPs on upstarts. I'm not going to argue that they tend to be pretty profitable. I've gotten assigned a few times though, so be prepared for that because it can dip. And if it dips on a Friday, you're gonna get assigned. You probably don't have all the data. But the only difference should be that there's more contracts in ES2. So ES1 is the current contract in front. ES2 is the has the next contract in front. What made you choose the 13 strike on Neo? I was able to pick up 12s for 0.75. I'm just playing the retest of the $13 level. I didn't want to buy them in the money. Big put order on shift search for upstart. Oh, 15 minutes ago. Still seems like someone really wants that gap below to fill on upstart. It's bugging an MM somewhere. I mean, they might need it to. Especially if they're continuously failing on a position at that price. Yeah, I don't think you have accurate volume data, Stefan. Any chance to see a squeeze on GME upstart or upstart? I don't really think squeezes are real. I mean, the odds of one happening are extremely slim. They can move up a lot in price, but a squeeze is pretty unlikely. You got some YOLO calls for today? No, maybe. I don't know. I have some calls on Neo that I bought. Most expensive studio you've seen in New York City? I saw a video yesterday of a studio that cost 1.5 million. I can't say I've shopped for them as like a buy. I've seen ones for rent that were like 28, 3,200. Big studios though, usually. Those are going to be like 800 or 1,000 square feet. It's a studio. How fucking big are the studios where you live, Chris McPherson? Can you explain a little bit about why an MM would need a gap filled to the downside to be filled in correlation with FTD failure? They could have internalized order flow at a specific price point, and they've been unable to offload the internalization because they haven't reached that price point again, and thus have no volume traded at that level. And in order to, maybe it's a big order, and maybe in order to avoid the loss, they're trying to get more order flow at that price point. In the meantime, they're continuously failing on that position. Those puts came in 15 minutes ago. Really? That's some big downside pressure. No, it's not. That's a good sign. It's good that they're buying huge blocks of puts. Bad way to look at it. I don't know. I just wanted leverage at the $13 test. We'll see if it moves back up. It'll probably be later in the day. I don't really care about the theta decay over the next like few hours, right? That's on FSLR puts now. Spike 3% today. Do you not use stops? I mean, you can hold them. I think the company's fucking overvalued, but if you have a short dated position, then you probably should have used stops on it, right? Especially once you're profitable. Wow, my warehouse is like 1,600 square feet and costs you like $500 a month. But that's because you live in like rural Arizona, man. You're not expecting action on Upstart Friday if it stays on Reg Show. Not really. The first day of fails wasn't that high, right? When the relisting process started. So the first day of fails on Upstart was, well, the first day of fails in excess of 0.5% of the shares outstanding was on 11/7, and it only failed 469,000. So yeah, I don't think Friday is going to be crazy. Can you explain to a poor how internalization is not market manipulation? I mean, it is, but it's also supposed to be. It's the job they're tasked with in order to create an efficient market and ensure that there is a buy and a sell at consistent price points in order to avoid price volatility. It's literally their job. It's not market manipulation is acting with the intention to manipulate the price of a security to your benefit. No, because market makers are manipulating the price of a security to the market's benefit. Jesus Christ, how hard are we going to push down today? How many hours do we have left? 2.5 hours? Any data here? No. Hmm. That's SPX a little bit. All right, so 1028. Ooh. Okay. Big puts at 39.30. Big calls at 39.25. That's interesting. Really big. Jesus Christ. OI exploded in the downside. Okay, 39.50 is call side favored. All right, there's some pretty big put positioning that's come in at 39.30. Like, not just pretty big, huge. Interesting. I think we're kind of safe right now from it because of the call interest at 39.50, which is also pretty decent. Um, okay. Curious. But I don't know if we're gonna drop that much. That's a much like bigger strangle though. JPM Hedge Equity Fund 3 is resetting its options today. Okay. Somebody's gonna dump then pump or pump then dump. I'm not sure if those are gonna go in the money at all. Honestly. They look like out of like just yeah, maybe like a collar or like a collar setting up. It's going to 39.27. It could. That would be kind of the midpoint between that fucking position. So hitting 3900 today would be a real treat for me. I'd be okay with it. I think yeah. My 39.50 puts will go in the money, and my straddle will go deep in the money. So that'd be cool. I know about the massive upstart order. Watch some fuck puts in the afternoon. Yeah. We'll see what Powell says, I guess. I'm gonna get something to eat, I think. Did I eat last night? Does covering GME cause too much risk, is therefore being deferred. I mean, it causes risk to someone. The deferral's just there. You don't cover anything ever until you have to. Either due to risk, right, which Upstart and Jimmy are not presenting right now because they're not running, right? Or dropping very fast. So they're fairly stable. Or because it's time. I don't know if you talked about this. Do you think Jimmy will rise into earnings next week? Then dump as usual, unless there's something spectacular in the earnings report. I don't know if we're gonna hit like positive free cash flow or positive EPS on this earnings. Historically, Q3 earnings are not great for Jimmy, so I'd imagine they're not going to be very good. Maybe they hope that it'll unlock some liquidity if longs sell out. IV should rise a bit into earnings. My boy who lives in New York City said if you want to live alone in a one-bedroom apartment, you have to make a minimum of 150K. Please confirm or deny. I mean, probably not that much. It depends what part of the city you live in. If you want to live in Manhattan, sure. I would say go to like Daniel or Per se, Ryan. If you want to make a drive up to like Westchester, uh, what is it? Blue. I can't think of the name of it right now. Blue Farms. Blue Hill Farms. Blue Hill at Stone Barns. That place is pretty good. SPX dropped to 3,900 the start of the speech. Rockets at 4,900, but 4,000 by close. Who knows what he's gonna say? I think it's closer to 1.5 million worth of put spot. All right. Selling CCs, maybe. At what point do you think they won't have to cover today, or is it right until market close for us to have to make that call? Unfortunately, it's into market close. There's historical precedence for having to wait through the entire fucking day. Yeah, I know. I'm not happy about it either. But you don't have to stay exposed. You can move your exposure now. You can move it later. It's up to you. Neo dead? I don't know. There's a bit of a sell off at 13. It looked better for a bounce before the market dropped a bunch. So with the market pulling back, we'll see. It could start to move up again. There's a lot of call interest, so Not so much at 1250, which is a bit worrisome. But there may be more now. Belly buttons are not my thing. Would you roll Upstart 20C to Jan, or just since they're close to the money, keep those and roll higher strikes? That's up to you. I'd probably just roll everything. That's the only way they can short the stock. OG rules is by buying. There's only like they can only use ETF liquidity or buy puts, right? There's no, if they hit the borrow pool again, they're gonna spike the rate because the borrow pool's pretty dry already, right? By buying out of the money puts, if they're out of the money, they're probably sold, but they might be buying out of the money to drag the price down. It's a big enough position that it's creating some short pressure, right? Yep, Delta goes up if they drive it down. I read a pretty cool DD that talks about the river running dry of available shares for forestalling covering. Yeah. Seems like an odd use of 1.5 million if you're trying to short. And if you think you can drive down the price of the stock, it's a good use of it. Is DRS the cause of GME's lowering volume ever since the split? Yes. Besides low liquidity, is there any reason they have a hard time pushing it below 18? I mean, there could be a share buyback at $18. Retail's probably pretty willing to buy at that price. There may be institutions buying at that price. It is cheaper than in the money puts. Let's say expiration on them, more importantly. What are the upstart shorts plan? Volume for sure needs to go up once we enter a forced settlement period to clear the FTDs. Yeah, it gets kind of tricky for them. I don't know how much of a plan they have. If they had a plan, they wouldn't be on Reg Show. They don't have to report any of their buyback till next earnings. Same question for Upstart. Would you keep in the money calls or roll them? Let's say those were 15C for December. In the money calls probably aren't so bad. You're not gonna have a lot of theta decay, especially like if you're like $3 in the money. Your delta on those is what, like 6.5? 8-1. 15 December 16th. 0.81. Yeah, I mean your theta decay is pretty minimal. It's like 3 cents. So up to you, but we may not get price improvement into the expiration of those. So if you're prepared to exercise them, that's fine. But the longer you hold them, the more likely that you'll need to exercise them. DRS has also made the stock basically untradeable. I think this is why we don't see obligations force buying anymore. There's just nothing to generate them. Or am I crazy to think this? The number of obligations generated in order to short the stock are significantly lower than they have been in the past because of DRS. It takes less money to drive down the volume and volatility of GME. It's less capital intensive, right? Well, volatility and price. Which means that when obligations are due, there are fewer of them. Why does it take less volume? Because the size of the market shrinks, right? The stock becomes not more illiquid, but the how do I put this? Hold on, let me think. So since the size of the market is reduced, the amount of energy needed in the market to create a shift in momentum is also greatly reduced. So you don't need to short as much or as hard to get the price to drop. I mean, DRS shares were being traded. Well, effectively, since shares aren't serialized, right? $18. How can less shares make it easier to drop the price? Because the market is less efficient. It also makes the price go up faster. Use the term liquidity. Any buying makes waves in the market more noticeable. But it's not liquidity. Like, you can use liquidity, but it's technically incorrect. It's easier, faster to move through an empty room than a crowded one. Yeah. DRS movement is slaps by the shorts, and Supersonic gobbled it like idiots. I don't really know if it was psyops by the shorts, but it benefits short volatility positions. Because they can still make a ton of money shorting volatility, but it becomes harder and harder to make money on the underlying. Market viscosity, yeah. No, DRS doesn't make it easier to short, it makes it cheaper to short. So the amount of capital put in is, it reduces the amount of cost in driving the price down. So if you needed, $80 million to move the price X amount of money to the downside, DRS reduces that cost. So 50% of the float is DRS. Now you only need $40 million to move the price the same amount. Upstart should be at 17,000 today. I don't understand where my calculations went wrong. Very interesting, popcorn trader. Is Daddy Powell set to speak today? Yeah, 1:30. What's the deal with the GME French loan? It's from COVID. It's kind of irrelevant. Well, no, when it does run it, it's not that it's going to run very violently, right? Because the extent of the run is directly in proportion to the amount of synthetic shorting that occurred in the prior period, right? And so if you reduce the amount of synthetic shorting, you reduce the size and volatility of the preceding or the run following it, right? What's up, Carl? Oh, you got stuff? Oh, cool. Okay, so going into... Alright, well, we got some stuff here. Hold on. Bring it up. Oh. There we go. Alright, so fail to volume ratio moving out after the 11-7, moves from 7, 14, 18, 19, with the lowest number of fails right on the day that it, or lowest fail to volume ratio right on the day that it came back onto Reg Show on the 14th. 90-day Upstart ETF FTD ratio, fail to volume ratio is continuing up. I'm guessing this steep drop off is where they tried to stop it from getting on Reg Show. And this is the smoothed average of the fail to volume ratio. It's failure to delivers or should be skyrocketing into the future based on historic precedents. Looks good. The rate of failure looks significantly higher than the last upturn. So, that's exciting. Smooth average not really relevant. It's fun to look at. Nice stuff, Carl. Do you have that comparison with that comparison chart with GME's 2020 fails? I want to see if that's still very much in line. Cool, thanks, man. How does forced short position closing work on an equity that goes private? It can be negotiated. Yeah, there's a few ways that it can be handled. It can be settled, kind of. I watched a river runs through it last night, and you're right about Brad Pitt being gorgeous, but I still don't understand. I still understand very little about the market. I can see that, Rusty. How does? Okay. What are the overall differences to GME 2020 through, though? AKA, what will keep Upstart from doing squarts, much less squeeze? I think the biggest rule change was the way Well, they've reduced the amount of hedging required for at risk volatility positions. So I think that's the biggest one that can prevent kind of like another volatility squeeze from occurring. Short interest reporting changes mean that you can't see, well, they're likely not going to accidentally report. Send this to Carl. I have no idea how to do that. I'll try to figure it out. That's a roundabout way. Thank you, NW. Where was I? What was I talking about? Oh yeah. Changes to short interest reporting mean that we probably won't ever see synthetic shorts reported again, even if they are exposed by Reg Show. Would we have seen some dark pool dumps by now if Upstart was going to be covered today? Probably. Not necessarily, but probably. Have shorts been selling SPX puts? A little bit of the 3950s look like they've dropped off. What's Neo? It's like a Chinese EV manufacturer. Update of zero settled cash to roll December's. I'm all in on FTDs. All right, I'm gonna grab something to eat real quick. I'll be back in, I don't know, like 10 minutes. Thanks, Brett. Oh, that was the worst. Chipotle got you too? No. Uh, the freight company that was bringing like the top of my desk left it in the street. Like they didn't even bring it in my building. They just left it in the fucking street. I can't believe nobody stole it. I DM'd you some pretty advanced math on my upstart price target. I'm not sure you will understand since you haven't finished your master's, but you can try. Upstart equals 21, P equals 16, S 19, T equals 20. Upstart equals 127,680 divided by 7.51, 741 plus 0.10 for extra crime equals $17,000, $17,001.33. Where did my math go wrong? Literally everywhere. See, what you've done is you've made up a bunch of arbitrary numbers, I assume based on a fever dream. And those have led you to some conclusions that are erroneous. Good thing you're friends with the door guy. He didn't help me at all. He was like, I think there's a package out on the street for you. I was like, thanks, man. What a fucking prick. Do you want to be bearish or bullish right now? Bullish. Give me bullish stuff. Keep your bearish shit to yourself. Well, that's exciting, Carl. Hmm. Wait, hold on. If our November 14 is GME December 2020 12/8, Then Carl, let me ask you, when moon? That means MOASS tomorrow. All right, what do you got, Dork? Okay, Jimmy looks lit. In case you change your mind. Yeah, the spy looks like dog shit today, I agree. I still have 5 calls open on this straddle, but they're already worthless. What are you eating? Well, now soggy Cocoa Pebbles, because I had to go outside my apartment building and drag a 72-inch desktop upstairs. And cinnamon raisin English muffins. With yogurt butter, which is gross. Don't ever buy it. So ever a nasty passive-aggressive Yelp review. No one ever reads that shit. Say it didn't arrive like a pour. Why, so I get another one? That's just what I need. 2 desktops. I really hope it's not the same company delivering my chair today. Because if they stick a steel case box outside my building, it's gone. On those charts, it looks like price didn't do much when fails dropped. Care to elaborate? Can't you just look at the chart yourself and then I don't have to? Here. Oh. Period where fails dropped. Price. What do you do to snap yourself out of a funky dry spell? Just keep trading. I got the gesture with the headrest. Do we need several bullish quarters now to get institutions to buy in? I don't think institutions are ever going to buy in until the stock is diluted enough to push fucking DRSers out. Some small ones might, but I don't think big institutions will. Or unless they can buy into bonds. That'd be a different story, though. Any thoughts on the New York City mayor announcing a policy to allow police to hospitalize the homeless against their will if they think they pose a danger to themselves or are unable to care for themselves? I think New York's kind of always had that. It's not really a new policy. We still have mental health institutions here. So they chuck them in the loony bin. I don't see how that new policy changes anything or disallows something that was not already allowed or allows something that was previously disallowed. My friend got drunk at a bar downtown and he spent 2 nights in Bellevue. He was a bit high on cocaine too, but actual transcript from an institutional trading desk. Okay, so if we buy 3 million shares of GME over the course of 3 days, the price will run to approximately $50. Yeah, nah, let's wait. I mean, waiting doesn't make it any better, right? Gap puts here. Hmm. Let me look. Jesus Christ, Gap has a lot of tickers. Um, no. No, I don't think I'd get puts here. Did they announce something? There's like a little room to the downside turd, but not much. Like maybe at most like back to 14. And the upside potential actually looks pretty decent.
Does the call chain building make that nearly impossible to do again safely? It makes it harder to do again safely. I know it doesn't look like it took them, or like it took a lot of effort to get them off of Reg Show, but it did. It did take a lot of effort. I never said GME looked lit. It's the top holding in XRT right now. I don't know how much. I'm not gonna lie, Turd. I don't know how much more operational shorting XRT is gonna be capable of without some settlement. They're like almost broke. No, I never said that. That's crazy. So trying to gaslight me. You provide any insight into the 1.2 million buy on Upstart March 10Ps volatility hedge? Not necessarily. Could just be shorting. Cheap. Could be an arbitrage play. I mean, there's a million potential reasons. They could just be playing a drop in the market into the end of the day that maybe they intend to short into really hard. Dear God, I'm not reading any of that. You're just like ko-fiing me copy pasta or something here? Okay. All he wanted was a Pepsi. How do they short before covering to create the dip before the squeeze? Buying lots and lots of puts. Or slamming the borrowing pool as hard as they feasibly can. They exhaust everything to its max. Every share they can borrow or buy. Because if they're doing that, it means they've given up and their losses are imminent, right? What do you got, Joey? Security and Exchange Commission Program for Allocation of Regulatory Responsibilities. Pursuant to Rule 17D, notice of filing an order of approving and declaring effective an amendment to the plan for the allocation of regulatory responsibilities among NYSE, American LLC, CBOE BZX Exchange, CBOE Edgar, Ajax Exchange, CBOE C2, blah, 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 concerning options related market surveillance. Okay. This just sounds like an approval for some sort of reporting requirement. Upstart fails on the above date period 40 million. GME fails on the above date period 21 million. God, that's bullish, Carl. Don't do that to me right now, okay? Can you please tell RC, Icon, and Pulte to make Upstart VUP? The stream needs the monocle badly. That's one way of putting it, Bob. Frag put their pickle in my jar. Help me. Where are you, Frag? I don't know where he is. At least tell us how much they donated on the long Ko-Fi. $3. We just rolling Decembers today or some Jans too? Just Decembers. No, this means Freg's alive. If Freg is back, I'm taking out a loan for 0 DTEs. I'm so excited right now. What if Freg is actually back? Yeah, I'm streaming. Yeah, fuck you, emergency exit. I'll ban your ass. Fucking sheep fucker. His memes used to be fire. He's been getting lazy lately. If ETFs are buying shares back at a specific time that other entities know about, isn't that implicating a pretty large scale illegal manipulation? No, it's just when things are due. I don't know if it's the real Frag or an imposter. I'm trying to find out. Hold on. Frag is probably frozen till spring. They found some of Frag's DNA and cloned him into a dinosaur? Almost 20,000 March 17, $10 puts bought on Upsquare. What mean? How do you know they're bought? Did someone tell you? How do we help Frag? He didn't say what he needed, and now I'm worried. I'm very worried too, C-Mill. Hi, Pickleman. My intern said it's your birthday. Sure. I knew it was an outstanding obligation, but due to the holidays and some FINRA rules, I could defer it until now. Happy birthday once again. Thank you so much, Ken Griffin. Appreciate the heads up. Carl is a deep fake. I was hoping for more being JPOW Day and all after JPOW speaks, not before. Well, somewhere out there, there's an entity with a big fat stack of cash due to the ETF that hasn't paid it to the ETF yet. And also, somewhere out there, there's an ETF that needs to buy a lot of shares. Do you think 0DT calls for today's speech or too high? Yeah, they're probably not worth it. I mean, I have a position, but I bought it yesterday, so I haven't added anything to it today. That fucking IV at the money was like 50%. It's ridiculous. What's your gut tell you about what JPAL will say? I'm full bull on far dated puts. I think he's gonna have a hard time topping his negativity from his last speech. Carl, if you'd like to, you can time emergency exit out for. You know, give him the old 1 hour. Unless he comes out riding a bear, the markets would rally. Day 112 of the great SPX 3900 to 4000 chop. Would JPOW come out crying, saying it's all over, be even more hawkish? Maybe. Rather than options, would a leveraged position in a 3x ETF make sense to you? Why? Why not just... For what purpose? I don't even know what you're talking about. Options on what? Speech is at 1:30. What's emergency exit's handle on here? I'm pretty sure, based on his level of intelligence and knowledge on GME or any of the other stocks that we look at, he doesn't watch the stream at all. He just oscillates between super stock and the Discord. Pretty much anywhere people will look at pictures of him and his tiny budgie and its smuggler, or talk to him about forklift driving. Oh no, my life savings again. And now the hedgies are saying inappropriate things. We at the hedgies would like you to know that we laugh at your feeble attempts to quantify our crime. We know the pickle jar went their attendees, and to that we say, get fucked, nerds. You can't have them. Also, we have your frag. He dances for our amusement for weeklies. Signed the hedgies. I'm gonna dox the hedgies right now. Hmm. Okay, never mind. It's just says the hedgies. Damn. JPO to give a speech about looking at if 100, 150 BPS hikes are needed as inflation continues to be outside of the target. I mean, inflation pulled back. What are your overall thoughts on obligations getting dodged? Could be a different deferral. Could happen at the end of the day. Who the fuck knows? They haven't been covered. That's what I do know, right? That's what I have data on. They haven't covered them. So everything remains super illiquid. ETF borrow rates across the board for GME are all increasing. That's a good sign, right? Who the fuck is shorting SPY SPX to oblivion? Could be longs repositioning on the straddle. This is kind of a big sell-off. I don't know what this is. It's a good question. Maybe more added to that short position at 39.30. Also, JPM's rolling a bunch of shit on SPX today, so volatile. There's a reason I'm not really trying to play any of this. Although I kind of want to sell some of my puts here. Is there a lower level for Upstart to look for, or is it anybody's guess now? I mean, there's not a lot of historical support in lower levels. Bot's liquidity is tanking. Cool. They haven't covered, sounds like some AMC tuber talk. Just go calculate the liquidity index for Upstart. Borrow shares to short the ETFs. Use the borrowed shares to make creation units for the baskets. Sell off the baskets. Market goes down. Come on, it's simple crime. Yeah. No, I don't think Fubo's getting delisted. Fubo was having a good morning earlier. There's some good news after hours yesterday. Well, not great news, but news. I think there was an explosion at the Ukraine embassy about 25 minutes ago. Which one? $39.60 zero DT only dropped 25% on that drop. IV is so high, any other time they would have been obliterated. Yeah, IV is kind of ridiculous. I think the upstart put position was closed. CDMs. Oh, okay. Yeah. Did they even make any fucking profit on that? What was the point of it? I mean, I guess. Barely. If at all, yeah. Wait, I thought I said 18 was a strong support and it's lower than that? I'm a shill. I mean, we're not really much lower than $18. The embassy in Madrid. Huh. That would be crazy. Turns out emergency exits handle in here is just emergency exit. If only I knew what he said and Carl hadn't timed him out in advance. Letter bomb exploded at a Ukraine embassy in Madrid. One person suffered minor injuries. Not big news. Yeah, that doesn't really sound like it. Weird, but yeah, it doesn't seem like big news. I think the SPY SPX has been sussin today. Movements seem uncharacteristically weird. What? No, they don't. Were, were you in the market yesterday? That's doing a lot of the same things. Hot steaming DM in a burning paper bag in front of your inbox. Ooh. So the liquidity index on bots fell off a cliff? That seems compelling. Hey, Dork, look at the 9th. Hmm. Yeah, the 9th through like, I don't know, is that the 10th? The morning of the 10th? It's not lit, it's fire. Looks like bots liquidity dried up there too. Yeah. Curious. In the overnight session too, right? Mentioned Linux and his ever accurate prediction cycle, which is never accurate. Has Linux been right since the one day in May that he called? Out of like the 50 other calls he's made? Why would you open and close $1 million position intraday like that? Hedging for a small period? Possibly, yeah. I'm not really sure. It's very odd. And it doesn't look like they made money on it either. Maybe they just exercise them, generate some liquid, like generate some volume. But even that doesn't seem super useful. RevRQ omnibus hearing today canceled. Looks like everyone agreed to all the procedural stuff in advance, so they canceled. That's it's kind of good, right? I mean, they're getting shit done faster. Usually these bankruptcy hearings drag out for months and months and months while everybody contradicts everyone else and fights to get the best scraps at the dinner table. I'm surprised Revlon seems to be so efficient so far. A lot of the things that Powell talked about to make him so hawkish have changed. Jobs are down. Manufacturing and tech leading the drop. CPI is cooled a bit. Europe and Canadian CPI too. I agree. That doesn't mean he's not going to be hawkish, though. I've been selling CSP on Upstart, but I'm selling them kind of out of the money. They're at 15. Hope I pick up some money by the end of the week to buy more options and kind of offset the loss in December. March 2023 in the money, $10 strike, Upstart puts being traded. Nearly 20,000 contracts. Yeah, it looks like 10,000 were bought and then 10,000 were sold. No, I don't think it's compelling enough to keep the December's open, unfortunately. Get the price down, they buy up to redeem ETF shares. Yeah. But the volume's so fucking low. Like, volume on Upstart today is only 2.33 million. GME's really low too. Jesus Christ. Didn't our GME strike prices mean anything? What do you mean? Yes, they're the price at which the contract is executed. The obligations just not matter anymore. There's other deferrals. We don't know which one they used. Thankfully, nothing important is happening on Linixis's December 6th date, so that's pretty cool. Yeah, the SEA 15C3, the soonest is the 7th, and then ETF FTDs not until the 9th. So I'll enjoy that. The lack of transparency from FINRA is maddening. It's very irritating. I agree. Does ES1 front run cat? No. What's up, Trash? So if Upstart follows the GME schedule, the squeeze could occur somewhere between 12/16 and 1/9. So December OPEX. Are these ETF FTDs in the room with us right now? Yes. Nike and Adidas to reduce production by 30 to 40%. Jerry News. Oof. Glad I'm not long Nike like that one guy. There's some flexibility in which deferral rules they can use, but there's only a few that are applicable. VIX is kind of taking off. And VIX probably spiked. I mean, it's up. Hold on. VIX is becoming slightly more positively correlated with the SPX. Say they're still pretty divergent. What an interesting game they're playing. Say I'm not like a big fan of it. I wonder how much of their flexibility comes from the lower call interest. Yeah, I'm well aware of SFT clearing. It can be used, but it's not in the ways you think. It's far less efficient than CNS. What did you selling your CSPs for with Upstart? This Friday. They're not really CSPs, they're just naked calls, but any theories on why VIX volume died after March 15th? Man, volume all over the market died in March. I opened Fed puts a few hours ago and kind of already want to take profit. Yeah, I have some 3950s that are supposed to be held for longer, but I kind of agree. There's definitely some incentive to take profit right now. I don't know if we're the bot's sisters or if it's trying to hook us up with some incest. I'm not really sure. Could you remind us of the theta horizon when theta really starts to eat up premium at increasing rate? 30 to 35 days out from expiry, 30 days out from expiry on out of the money positions, 20 days out if you're at the money or in the money, slightly in the money. Yeah. After 20 days, it gets really bad though. 30s like kind of, if you're looking at like the graph of like theta over time, 30s kind of like right here, 20s kind of like right here. It's like 45, 90, 180, so on. Clicked the Sexbot link. Now my work computer has a virus. I won't stop buying Upstart calls. Should I switch computers with a coworker who's out sick? Should switch brokerage accounts with your coworker who's out sick. I apologize. Meetings on meetings. Upstart to 1744 gap, or the MM hates money. I mean, I'm not gonna lie. It looks like the MM's really trying to get to that, but they haven't. You think we'll see 3930 before the speech? We could. I don't know if we see another big leg down. Yeah, it's possible. Upstart hasn't been falling. Upstart rose after earnings, and then I think all of these are either at the same level or like volume traded is slightly higher, right? So if you follow the curve of volume after it went on reg show initially, right? It's turning around. So we are up from, not that long ago. This is from shorting, right? This is why there's massive short positions. You don't get massive short positions when the price is rocketing. Generally speaking, you know. It's part of buying into stocks that are heavily shorted is they're being heavily shorted. So the price tends to go down, right? I'm not trying to be an asshole. I feel like I'm pointing out something that should be pretty obvious. Jimmy had downside during that period too, there, right? Like after RC bought in. RC had two buy-ins, first of all. The second of which occurred after it was already on reg show, but Jimmy had plenty of downside through these periods. So this was RC's like first buy-in back here in August, right? And then a second one was here in like early December, or late mid-December. But there were plenty of periods where we moved down and traded flat. This is the wait, let's see, where's the second inclusion here? Also, Upstart's failing a lot more than GME was at that time. But that's the second reg show inclusion, right? And after we went on reg show the second time, we went down for what, 5 days straight before starting to turn around. And if you look on regular candles, which is probably a better way to look at this, we really didn't move back up to that same level for Jesus till right before December OPEX. What are Upstart FTDs versus GME for the same time period? GME pre Jan 2021 and Upstart now. 40 million on Upstart versus 21 million on GME. So almost double the fail to volume ratio. You don't think they're not CSPs, they're naked, Drake. So I'm just burning up margin into the end of the week, like excess margin. Because why not, right? Free money. 17 is reasonably safe. 1650 is probably fairly safe as well, and probably not worth it if you're selling if you're cash securing. Like 1650 is kind of far out, right? I think what gamma neutral's at 1750, so a drop below 1750 is pretty fucking unlikely. Not without a lot of short pressure, right? And we already know they don't have that much of that. Think about it like this. Every day, Upstart has however many puts they can buy, like however much delta they can extract out of puts, plus a million shortable shares from ETFs, roughly 1.2 million. Depends on which ETFs. So if they start covering, they have very little to short with, right? Because you can't use puts to short covering. Because when you buy the put, right, say you're covering the underlying and you're trying to short with puts simultaneously, and say you buy like a 0.8 put, right? The price is rising because you're covering. So you start losing delta on the put, right? And the market maker starts buying shares, which drives prices even higher. So you can't use puts to short covering. You can only use puts to short when the price is stagnant. So if they start covering, then they only have like a million shares a day to short with, which is during a covering event, not a lot. And that's really generous. Like the million, 1.2 million shares, that's assuming that all the ETFs are going to be complicit in allowing them to create shares willy-nilly against their NAV, and not all of them are likely to operate that way. And it's not like it's in XRT, right, which is just extremely complicit. At least enjoy the dip while it lasts. You just clip it. Use the little the clippy thing, champ. You can clip it and post it in the Discord. I don't have a clippy thing. I do, but it's like a pain in the ass. You don't. Someone else will clip it. Can someone with the clippy thing do the clippies? If GME is so liquid, then how come the spreads are relatively tight? GME is. The spreads aren't relatively tight. The spreads are extremely wide given the number of shares outstanding, right? Like they're much tighter than they used to be before the split. But there's far more shares in circulation now. And then also look at the spreads out of the money on GME. Like not at the bid, right? But look like I mean if you move like two orders down the chain, the spread's at like 4 cents, then it goes up to 8. Then it's at like 15 cents, 20. Like this isn't a stable order book, right? There's just no volume. So the spread is tight at the money, but it widens very quickly, right? So when you're looking at like the spread in the order book like that, um, a very liquid stock will have a tight spread all the way up across the bid ask, right? But on GME, it's kind of like this, and the spread, well, I should say it's like that, and the spread widens the further out of the money you get, right? So the more volume that comes into GME, the more unstable pricing becomes, and really rapidly too. Somehow calling him champ sounds even more patronizing then calling all of us by our terrible names. But that's his name. Any reason to not sell Fubo CCs until next earnings pretty aggressively? Or do you see it running potentially with any vol on Upstart GME? Yeah, that's kind of the problem. Also, selling aggressive CCs on Fubo's just not worth it, right? It's hilarious watching the MBBO collapse when a big order comes in and then the volume completely stops as soon as the order book gets too wide. Yeah. Well, that's kind of like what happened on Upstart the other day with that 500 order, right? Is, you know, you had these at the money prices at like 1850 or 1820 or whatever the fuck it was trading at, right? And, you know, the spread's widening, right? You have some more here and you have some, you know, a little bit more density on the ask side here at like 1910 and then nothing till 20, right? And the volume, you know, here was pretty strong. But then it got, you know, weaker and weaker and weaker. And so one big order comes in and the price rockets up the ask, right? Because there's not enough volume to satisfy the market order here at 1820, and there isn't enough at 1830 or 1910. So it had to go all the way up to $20 in order to satisfy the condition of the order on the book. That's what happens to GME when it does those volatility halts. Is the so much volume comes in at once that it blows out the ask, right? And then they halt the stock because the clearinghouse isn't gonna, you know, generally they might fill a couple, but they're not gonna fill orders at like $600, right? Because you know at GME your order books, you know, like you got, you know, 25, you got in 25.50, and then you got, you know, 32 or whatever and like 34. So it's like there's more in between here, but and then you have like some asshole up here with like $600, right? And if volume blows out the ask side, then, you know, the clearinghouse would have to start filling orders at 600. And so they're just not going to do that, right? They'll just halt the stock. And that's like what a volatility halt is. Is Opera options data a must have to be a successful options trader? No, not at all. Can you look at Ape for scientific reasons? Is it at 0 yet? I know you're going to dodge this question because you don't want to hurt me. That's why I dodged it the first time. So I'll ask again. I haven't heard from my girlfriend all day, and you were gone for an extended period of time. Coincidence? Absolutely not. We were getting her lip waxed. Eventually, Ape will be worth what AMC is worth. There's your hopium. If AMC is worth 50 cents, such will be the fate of Ape. Well, the huge put orders on Upstart from the Felix Exchange, crime. They're trying to grind down FTDs. Probably. Generating volume in order to clear them. They probably don't want it to hit force covering, except I don't think they can prevent it at this point. There's not enough days. After FSLR mentioned in Pickles Picks, who checked solar companies, why do they all have seemingly have such insane PE ratios? So that's because of the Infrastructure Act and the Inflation Reduction Acts. They get these massive tax incentives as long as they operate within the U.S. which has led to tons of speculation as the cost of energy has risen, right? The problem is they can't, most of those companies can't keep up with the amount of order flow that they have. Um, their margins are shrinking alongside everyone else's. So they're just not very stable in at those prices. And I don't think a recessionary like macro environment is gonna allow them to continue to sustain those valuations. They're probably a great long-term buy at the right price. Just they're not trading at the right price right now. Remsen Timms is gonna make such a good dad in 9 months. He really is. Best of luck to you, Rims and Timms. Also, make sure you give him a lot of books. Even if he's smarter than you, don't take it personally. Upstart Jimmy Pop, huh? Maybe, I don't know. Oh well. Maybe. Maybe just wait for Powell to talk. Nvidia puts though. What about him? Nvidia's overvalued. It's way overvalued. Give it time. I have puts on it, but I'm not entering. I'm not like, you don't need to rush into the position. You have a lot of time to enter it. Just be patient. I've been buying some. It's not like the market's gonna crash tomorrow, probably. I think they're stream sniping your plays. Maybe. I hope so. Everything with a P over 50 in this macro is very overvalued, right? Just permabulls being delusional? Not necessarily. There's some businesses that do very well in a recession. There's things like Cat that, just simply aren't overvalued at all. What is Cat's P? It can't be very high. Sherwin-Williams, stuff like that. Like Sherwin-Williams is trading at like 32. Those will go up. Some of those PEs will go up. So they'll be, as we move deeper and deeper into recession, you'll see more and more sector shift. I mean, have you ever seen like commodities run at like 100 PEs? Because it's happened. Like when the commodities market heats up, like industrials, manufacturing, that shit goes crazy. It's been a while, but it does. Looks like I'm gonna be a stepdad if she's pregnant. No, Rims and Tims, don't think of yourself like that. You're gonna be its father. You're the father. P should contract when rates go up as future cash flow is worth less. Yeah, but we haven't seen that happening yet, right? And we won't, as long as like all these mega caps and big tech companies continue to, stick with their continually missed forward guidance, right? It is irrational. And there's a decent chance we see a collapse in corporate debt, but uh timing that's really difficult. Volume per exchange on Upstart is compelling. Since reg share inclusion, CBOE percent is trending up bigly. Yeah, well, because they have to use puts to short. Who's forcing them to cover FTDs when on reg show? SEC. It's a forced closure. They don't it's not forcing them to do it. They simply buy. You know how your broker will sell off your position if your margin called, Jacko? Same deal. They don't have any control over it whatsoever. That's how forced closing works. The counterparty closes the position. Man, all of you guys would do with a good month as a fetching Starbucks at a hedge fund. Oh sweet summer child, Girk. They don't have enough days to dodge reg show. Ha ha ha. After a statement like that, perhaps it's time for Frag to come up with a dance for you and your pickle jar ilk. We'll call it The Fregulator Has No Clothes, and we'll make him do it naked, signed hedgies. Don't you touch Frag, you sons of bitches. Little do they know, Freg loves to dance. I saw him at his first interpretive dance event at the Hollywood Bowl on the side stage. It was beautiful. What's the first day of forced settlement? Friday. Margin failures aren't real. Yeah, for the reason I just described. No problem, Jacko. Can you please explain why awesome oscillator is hot garbage? Or is it actually awesome? And I was right to exclusively rely on it for positioning for December OPEXmas. You know what? If it's working for you, Ryan, keep doing it, man. Kirk, please read this message from the pores. Okay, you're welcome. Margin failures aren't real if you just delete the app. Well, will you be able to pull up JPA's speech, or is it available online? We could just probably watch it. No, you're awesome, Ryan. Rims and Sims, if you didn't catch his meaning, I can translate for you. Don't think of it like that. You're gonna be a dad. Same like, I'm not paying child support. My DNA is not in the system. Can you translate JPA's speech for us again? We'll see. We need JPAL to mention the basket. He's not going to call out any specific tickers. I wonder if there's historical precedence for that. As a Fed chairman, no, I don't think so. I don't think there's any precedent for a Fed chairman ever specifically describing an individual equity. That would be no. You can't do that. The Fed could come in and buy a bunch of Upstart though. That'd be fun. Started looking at EGHT. It's 141% institutionally owned. No, it's not. It has some ETF FTD correlation with a 1031 run. Okay, that's interesting. It's not 141% institutionally owned. That's just a delay in reporting of like 13 F and Gs. It might have a lot of institutional ownership. Probably does. What's to tell if Powell is in danger and they're forcing him to go out devish? I don't know. If I was gonna buy back Upstart, now would be as good a time as any. Sure. Ivy will bleed off after the speech starts, but it can also pick up during the speech, depending on what he says. Any thoughts on the Netflix run this morning? It's pretty fun. I have some bull put spreads on Netflix. They're kind of farther dated, but let me see. Let me see what it looks like. I haven't really been paying attention to them. It looks pretty good. I had a target range for puts on Netflix, which it just hit yesterday at the 275 level. Might pull back to the 300 level. I know that's not a lot of room from where it's at now, but it looks good. It's in like an ascending triangle. Nice opportunity, especially with that big fat gap to the upside, right? Probably not a terrible entry for like farther dated out of the money calls. Although heavily dependent on the macro conditions, right? So there's some risk. Spreads are better there because if you do hit downside, you want to hit a little bit less of it. Bought a bunch of weeklies on Genie and Upstart, and they're down bigly. I should triple down at this point, right? That sounds terrible, J Fresh. What if we sponsored JPOW and pay for an Upstart logo on his shirt? We can decorate him like an F1 driver. I think all politicians should be decorated in such a manner. That way you know who's paying them. Right? I haven't watched it, Spider-Man, but I've heard from a bunch of people that it's pretty decent. What if JPass says nothing, stares at the camera for 10 minutes, and walks away? Well, he'd be out of a job, but it'd be interesting. Bill just passed to avert the rail strike. Bullish as fuck. It was never going to happen anyway. So if they don't cover Upstart obligations today or tomorrow, they force close on Friday. No, they force close obligations from November 7th on Friday, and then November 8th, and then November 9th, and then November 10th, and the subsequent days. On in perpetuity until no more obligations are generated. A whole year of this. Nobody knows how like reg show works. Nobody understands synthetic shorting. What am I doing with my time? Wouldn't it be awkward and everyone has an FTX badge? Mitch McConnell comes out and he's just wearing a full Jack Daniels costume. He's just dressed as a bottle of Jack Daniels, like a mascot. Thanks, 8Ra. You do too. Remember, Edwin, that the price has to move enough to offset the decay in theta, which it may not do. Well, since Jack Daniels represents 98% of Kentucky's GDP, it only makes sense. What's preventing another $28 billion exemption that occurred with GMA? Nothing. That's been building a long-term position on ASTS after their share offering. Is their share offering complete? I don't particularly like them. Telecommunications is, I guess, okay. To have exposure to, but why not like AT&T or something better? On the 11th day of Reg Show, a Centaur gave to me Jan 25 10 Cs, 10 weeklies, 9 Jade Lizards, 8 Leap Options, 7 FTDs, 6 Pours of Crying, 5 Golden Frags, 4 FTX puts, 3 Credit Suisse interns, 2 Wendy's Dan jobs, and a Kendra White shower party. Thank you so much, Fiscal Stupidity. Beautiful. And what a great way to start bringing about the Christmas spirit. Jim Beam? Ah, whatever. Whichever one they make in Kentucky. I don't know. I don't drink that swill. Baseball bats? What else do they have there? Is he gonna come? Is he gonna come out in his birthday suit, swinging his Louisville Slugger? Sorry, Louisville. Remember the unhedged Jimmy Long position of JPM for a year ago? Whatever happened with that? They even talked bullish things about it back then. They probably sold in March. It's Louisville. I lived in Kentucky for about 8 months. It's pronounced LOL. They just launched the share offering of 65 million yesterday after hours. It's risky, but they have partnerships with many MNOs, including AT&T and Vodafone. Again, why not just buy AT&T and get that sweet, sweet dividend? The people I've known from Kentucky have said Louisville. Louisville. It's horrific. No, Deere's not the same. They have a different profitability model entirely. Everyone always tries to buy Deere when I'm bullish on Cat. Very different companies. Similar industry exposure, but they're very different. One thing you can see is the popularity of Jameson in the US. Paid product placements in TVs and movies pays off. Jameson is nowhere near the best Irish whiskey. Seeing people drink it pours. Yeah. Lara Bar. Do you know that IV on SPX or puts are higher than calls? Elevated VIX. Delta skew. No, I'm not pushing cat calls. Relax. What happened to all those people who were asking me about shorting cat a couple weeks ago? Has that been a successful endeavor? You don't have to answer. I'm back. I had some chorizo quesadillas for lunch. Alright, so you're not going to be here for long, I take it. Puts are not same like shares, but they do cost same like shares. I grew up in Kentucky. There's a town named Versailles. France has one too, although in Kentucky they pronounce it Versailles. I haven't lived in Louisville for many years. Dear God. What's your prediction for the JPOW speech? I don't know. I don't think it's going to be that bad. But he surprised me last time. Gurk, I've never traded in a bull market. Is it easier to make money? Yes. It's super fucking easy to make. Think about it this way. It's so easy to make money in a bull market that Wall Street Bets made money most of last year. I don't know if anything changed on the Upstart borrow rate. It was up a little bit this morning, I think. I haven't asked JFresh about the prime borrow rate on it in a few days. I'm not sure what that's at. Sorry, been in GCP trainings all morning. What's market haps? Do we run on Devish JPOW Serenade? Are you straddling? Strangling loosely. Cucumber Cat and AGCO, their moves too much more similar. They are. United Rentals is another one that's really similar to Cat. There's also Cairo, Illinois. Yeah, I know about that one. It's it's spelled Cairo, but yeah, that's pretty funny. Have any of you guys ever driven through Nebraska? It's the fucking worst. It's just 563 miles of corn and then Omaha. Just heads up, single stock short ETFs were supposed to go into effect tomorrow, but the date was pushed to December 15th. Cool. Just tell the poors about URI. Okay. I told them about Sherwin already. They don't listen though. Maybe next year everyone will be bullish on Sherwin Williams with me. Neo's still testing 13. It looks like it's recovering. See what the market does, right? Streaming JPOW? Yeah, I'll pull it up. Ugh. Where the fuck is he speaking? That's not today. Governor Cook on outlook for monetary policy. They haven't tweeted anything about it yet. He's speaking of the Brookings Institution. Hold on, I'm trying to find a. Oh, I found it. Cool. Yeah, I'll put it up when it goes live. It's available on Fubo. You can stream it on browsers. I don't have a subscription. I don't work at the SEC. Oh, thanks, Trash. Chance upstart rockets based on Fed speech. $8 million in upstart puts today. Cool. Why do you guys know so much about signing up for browsers? I guess the speech has begun. Oh, yep, it has.
When President Trump named Jay Powell as the Federal Reserve Chairman in 2018,
Who the fuck is this guy?
anticipated a global pandemic. And don't forget that then the Fed's challenge was too little, not too much inflation. So Jay Powell has repeatedly been forced to confront the unexpected and had to steer the United States economy through uncharted waters.
Jay Powell changed his hair.
Great personal integrity, independence, and an unwavering commitment to the Fed's dual mandate, price stability, and maximum sustainable unemployment. Though I don't think I need to explain any of you that today, despite stiff headwinds, both economic and political. So we're pleased to welcome to the stage today, on behalf of the Brookings Institution and the Hutchins Center on Fiscal and Monetary Policy, Jay Powell. Following his remarks, Mr. Powell will field questions from David Wessel, the director of Hutchins Center, and from the audience. Jay, thank you for joining us.
Thank you, Glenn. It's great to be here today. It's great to be back at Brookings. So today I'm going to offer a progress report on the FOMC's efforts to restore price stability to the U.S. economy for the benefit of the American people. And that report must begin by acknowledging the reality that inflation remains far too high. My colleagues and I are acutely aware that high inflation is imposing significant hardship, straining budgets, and shrinking what paychecks will buy. This is especially painful for those least able to meet the higher costs of essentials.
I love how the market
food,
rallies on
housing, and
any news that
transportation.
affects the poorest.
Price stability is the responsibility of the Federal Reserve and serves as the bedrock of our economy. Without price stability, the economy does not work for anyone. In particular, without price stability, we will not achieve a sustained period of strong labor market conditions that benefit all.
I know where I can put this.
We currently estimate that 12-month PCE inflation through October ran at 6.0%. While the October inflation data received so far showed a welcome surprise to the downside, these are a single month's data, which followed upside surprises over the previous 2 months. As Figure 1 makes clear, down months in the data have often been followed by renewed increases. It will take substantially more evidence to give comfort that inflation is actually declining, and by any standard, inflation remains far too high. For purposes of this discussion, I'll focus my comments on core PCE inflation, which omits the food and energy inflation components, which have been lower recently but can be quite volatile. Our inflation goal is for total inflation, of course, as food and energy prices matter a great deal for household budgets. But core inflation often gives a more accurate indicator of where overall inflation is heading. 12-month core PCE inflation stands at 5.0% in our October estimate, approximately where it stood last December when policy tightening was in its early stages. Over 2022, core inflation rose a few tenths above 5%, and it fell a few tenths below, but mainly it moved sideways. So when will inflation come down? I could answer this question by pointing to the inflation forecasts of private forecasters or of FOMC participants, which broadly show a significant decline over the next year. But forecasts have been predicting just such a decline for more than a year, while inflation has moved stubbornly sideways. The truth is that the path ahead for inflation remains highly uncertain.
He meant up.
For now, let's put aside the forecasts and look instead to the macroeconomic conditions we think we need to see to bring inflation down to 2% over time. For starters, we need to raise interest rates to a level that is sufficiently restrictive to return inflation to 2%. There's considerable uncertainty about what rate will be sufficient, although there's no doubt that we've made substantial progress, raising our target range for the federal funds rate by 375
Stubbornly
basis
sideways
points
in a
since
general
March.
upward pattern.
As our last post-meeting statement indicates, we anticipate that ongoing increases will be appropriate. It seems to me likely that the ultimate level of rates will need to be somewhat higher than thought at the time of the September meeting and the summary of economic projections. I will return to policy at the end of my comments, but for now I'll simply say that we have more ground to cover. We're tightening the stance of policy in order to slow growth in aggregate demand. Slowing demand growth should allow supply to catch up with demand and restore the balance that will yield stable prices over time. Restoring that balance is likely to require a sustained period of below-trend growth. Last year, the ongoing reopening of the economy boosted real GDP growth to a very strong 5.7%. This year, GDP was roughly flat through the first 3 quarters, and indicators point to modest growth this quarter, which seems likely to bring the year in with very modest growth overall. Several factors contributed to this slowing growth, including the waning effects of reopening and of pandemic fiscal support, the global implications of Russia's war against Ukraine, and our policy actions, which tightened financial conditions and are affecting economic activity, particularly in interest-sensitive sectors such as housing. So we can say that demand growth has slowed, and we expect that this growth will need to remain at a slower pace for a sustained period. Despite the tighter policy and slower growth over the past year, we have not seen clear progress on slowing inflation. To assess what it will take to get inflation down, it's useful to break core inflation into 3 component categories: core goods inflation, housing services inflation, and inflation in core services other than housing. Core goods inflation has moved down from very high levels over the course of 2022, while housing services inflation has risen rapidly. Inflation in core services ex-housing has fluctuated, but shown no clear trend.
What is this
And I'll
corn
discuss
inflation?
each of these items in
Just
turn.
big corn.
Early in the pandemic, goods prices began rising rapidly as abnormally strong demand was met by pandemic-hampered supply. Reports from businesses and many indicators suggest that supply chain issues are now easing. Both fuel and non-fuel import prices have fallen in recent months, and indicators of prices paid by manufacturers have moved down. While 12-month core goods inflation remains elevated at 4.6%, it has fallen nearly 3 percentage points from earlier this year. It is far too early to declare goods inflation vanquished, but if current trends continue, goods prices should begin to exert downward pressure on overall inflation in coming months. Housing services inflation measures the rise in the price of all rents and the rise in the rental equivalent cost of owner-occupied housing. Unlike goods
I hope it
inflation,
doesn't say
housing
anything
services
bearish because I'm
inflation has
stopped out of my
continued to rise
pets.
and now stands at 7.1% over the past 12 months. Housing inflation tends to lag other prices around inflation turning points, however, because of the slow rate at which the stock of rental leases turns over. The market rate on new leases is a timelier indicator of where overall housing will go over the next year or so. Measures of 12-month inflation in new leases rose to nearly 20% during the pandemic, but have been falling sharply since about mid-year. As Figure 3 shows, however, overall housing services inflation has continued to rise as existing leases turn over and jump in price to catch up with the higher level of rents for new leases. And this is likely to continue well into next year. But as long as new lease inflation keeps falling, we would expect housing services inflation to begin falling sometime next year. Indeed, a decline in this kind of inflation underlies most forecasts of declining inflation. Finally, we come to core services other than housing, and this spending category covers a wide range of services, from healthcare and education to haircuts and hospitality. This is the largest of our three categories, constituting more than half the core PCE index. Thus, this may be the most important category for understanding the future evolution of core inflation. Because wages make up the largest cost in delivering these services, the labor market holds the key to understanding inflation in this category. In the labor market, demand for workers far exceeds the supply of available workers, and nominal wages have been growing at a pace well above what would be consistent with 2% inflation over time. Thus, another condition we're looking for is the restoration of balance between supply and demand in the labor market. Signs of elevated labor market tightness emerged suddenly in mid-2021. The unemployment rate at the time was much higher than the 3.5% that had prevailed without major signs of tightness before the pandemic. Employment was still millions below its level on the eve of the pandemic. Looking back, we can see that a significant and persistent labor supply shortfall opened up during the pandemic, a shortfall that appears unlikely to fully close anytime soon. Comparing the current labor force with the Congressional Budget Office's pre-pandemic forecast of labor force growth reveals a current labor force shortfall of roughly 3.5 million people. This shortfall reflects both lower than expected population growth and a lower labor force participation rate. Participation dropped sharply at the onset of the pandemic because of many factors, including sickness, caregiving, and fear of infection. Many forecasters expected that participation would move back up fairly quickly as the pandemic faded. And for workers in their prime working years, it mostly has. Overall participation, however, remains well below pre-pandemic trends. Some of the participation gap reflects workers who are still out of the labor force because they're sick with COVID-19 or continue to suffer lingering symptoms from previous COVID infections or long COVID. But recent research by Fed economists finds that the participation gap is now mostly due to excess retirements, that is, retirements in excess of what would have been expected from population aging alone. These excess retirements might now account for more than 2 million of the 3.5 million person shortfall in the labor force. What explains these excess retirements? So health issues have surely played a role, as COVID has posed a particularly large threat to the lives and health of the elderly.
I know.
In addition, many older workers lost their jobs in the early stages of the pandemic when layoffs were historically high. The cost of finding new employment may have appeared particularly large for these workers, given pandemic-related disruptions to the work environment and health concerns. Also, gains in the stock market and rising house prices in the first 2 years of the pandemic contributed to an increase in wealth that likely facilitated early retirement for some people. The data so far do not suggest that excess retirements are likely to unwind because of retirees returning to the labor force. Older workers are still retiring at higher rates, and retirees do not appear to be returning to the labor force in sufficient numbers to meaningfully reduce the total number of excess retirees. So, the second factor contributing to the labor supply shortfall is slower growth in the working age population. The combination of a plunge in net immigration and a surge in deaths during the pandemic probably accounts for about 1.5 million missing workers. Policies to support labor supply are not the domain of the Fed. Our tools work principally.
Did he say early retirement? He meant everyone became day traders.
Particular policy, however, I will say that policy to support labor force participation could, over time, bring benefits to the workers who join the labor force and support overall economic growth. Such policies would take time to implement and have their effects. For the near term, a moderation of labor demand growth will be required to restore balance to the labor market.
Yeah, I'm well aware, Jason.
Currently, the unemployment rate is at 3.7%, near 50-year lows, and job openings exceed available workers by about 4 million. That is about 1.7 job openings for every person looking for work. So far, we've seen only tentative signs of a moderation in labor demand. With slower GDP growth this year, job gains have stepped down from more than 450,000 per month over the first 7 months of the year to about 290,000 per month over the past 3 months. But this job growth remains far in excess of the pace needed to accommodate population growth over time, about 100,000 per month by many estimates. Job openings have now fallen by about 1.5 million this year, but remain higher than at any time before the pandemic. Wage growth, too, shows only tentative signs of returning to balance. Some measures of wage growth have ticked down recently, but the declines are very modest so far relative to earlier increases and still leave wage growth well above levels consistent with 2% inflation over time. To be clear, strong wage growth is a good thing, but for wage growth to be sustainable, it needs to be consistent with 2% inflation. So let's then sum up this review of economic conditions that we think we need to see to bring inflation down to 2%. Growth in economic activity has slowed to well below its longer-run trend, and this needs to be sustained. Bottlenecks in goods production are easing, and goods price inflation appears to be easing as well, and this too must continue. Housing services inflation will probably keep rising well into next year, but if inflation on new leases continues to fall, we will likely see housing services inflation begin to fall later next year. Finally, the labor market, which is especially important for inflation in core services ex housing, again accounting for more than half of the category, shows only tentative signs of rebalancing, and wage growth remains well above levels that would be consistent with 2% inflation over time. So despite some promising developments, we have a long way to go in restoring price stability. Returning to monetary policy, my FOMC colleagues and I are strongly committed to restoring price stability. After our November meeting, we noted that we anticipated that ongoing rate increases will be appropriate in order to attain a policy stance that is sufficiently restrictive to move inflation down to 2%.
Good JPAB bailing out the longs.
Monetary policy affects the economy and inflation with uncertain lags, and the full effects of our rapid tightening so far are yet to be felt. Thus, it makes sense to moderate the pace of our rate increases as we approach the level of restraint that will be sufficient to bring inflation down. The time for moderating the pace of rate increases may come as soon as the December meeting. Given our progress in tightening policy, the timing of that moderation is far less significant than the questions of how much further we will need to raise rates to control inflation and the length of time it will be necessary to hold policy.
Is this how smug I am when the stocks I buy run?
It is likely that restoring price stability will require holding policy at a restrictive level for some time. History cautions strongly against prematurely loosening policy, and I'll close by saying that we will stay the course until the job is done. Thank you.
Thank you very much, Chair Powell. I think you spared me the chore of asking you to pick between 50 and 75, so I won't have to ask you that. Thank you for your last paragraph. But I want to talk a little bit about wages and inflation. So, as you said, wages are rising faster than is consistent with a 2% inflation rate, assuming reasonable productivity. You said in November that wages are not the principal cause of prices going up. But for many workers, real wages have been falling lately. So I wonder, isn't there room for wages to rise a bit faster so workers can make up lost ground? And what level of wage increases do you think is consistent with a 2% inflation target?
Okay, so I guess I would start by saying that the inflation that we saw at the beginning of this episode back in March of 21 was not really related to wages at all. It was related to tightness in goods markets, largely due to supply chain issues. Over time, though, inflation has now spread broadly through the economy. And while I would still say that the inflation we're seeing now is not principally related to wages, we think that wage increases are probably going to be a very important part of the story going forward, particularly as it relates to that third category of core services ex housing. So we think it is an important thing going forward. And ultimately, in the service sector in particular, where wages and benefits are by far the largest cost, wages need to go up. And of course, we want wages to go up. We want wages to go up strongly, but they've got to go up at a level that is consistent with 2% inflation over time, making basic assumptions about productivity. So if you look at the principal wage measures that we look at, I would say that you're 1.5 or 2% above that with current wage increases. So particularly the employment compensation index and the average hourly earnings index. Look at those two. It's about
Jesus
1.5%
Christ, I never heard
higher
somebody fall down
than what would
a
be
set of
consistent,
stairs with
making
a
various
sentence
adjustments,
before.
including for productivity from nominal wages. So, and as we look at the labor market today, including today's JOLTS data, what you see is a labor market that there's a real imbalance between supply and demand. There are 1.7 job openings for every unemployed worker, everyone looking for a job. The so-called jobs workers gap is about 4 million, meaning if you look at all of the available jobs, including people who are working, and then look at people who are in the labor force or looking for a job, there's a 4 million shortfall. So you're in that world, and we think that there's a job for moderating demand in there and getting the labor force back into balance.
You don't think that there's a possibility that we should have a period of catch-up of wage increases above the sustainable level, and that businesses with relatively fat profit margins can absorb some of that without passing it through?
So that's the question of the worker share of profits and that kind of thing is not really related to this. Right now, people's wages are being eaten up by inflation. So what you want to do is you want to have inflation stable and then have a very strong labor market where the biggest wage gains are going to the people at the bottom end of the spectrum. And we had that at the end of the very long expansion that ended with the pandemic. That's not what we have now. Now, for most workers, the increases they're getting in wages are being eaten up by inflation. That's actually not true at the bottom end, where wage increases are higher than inflation. And that's a good thing. But if you want to have sustainable, strong labor market, where real wages are going up right across the wage spectrum, especially for people at the lower end, you got to have price stability. And until we restore that, we can't get back to that place where we kind of were for the 2 years before the pandemic hit.
And did you take, when you looked at today's JOLTS data, which measures the vacancies and quit rates, did you find that encouraging?
More or less in line with expectations, but that's
going the right direction.
That's a good thing, right? Yeah. So I guess job openings came down by several 100,000 to where they are now, and yeah, that's a positive thing. As you know, the relationship between job openings and unemployment is a very fraught one, and job openings right now, compared to unemployment, are at their near their all-time high level.
I like how you said services industry. I mean, we can't let the poor's have wage gains above 2% inflation.
The labor market could come back into balance to some extent through a decline in job openings, and that there's been a typical relationship between increasing unemployment and declining job openings, but that our thinking has been, and many labor economists share this, that you could get a decline in job openings that wouldn't produce the same increase a smaller increase in unemployment than is typically the case looking back in history because of the very outsized level of job openings. And we've kind of seen that so far, but it's way too early to say that'll work.
Traditionally, the Fed looked at the unemployment rate as a measure of labor market tightness, and we've seen recently that may be misleading. Unemployment rate is still very low, and as you pointed out, job vacancies are starting to come down. But to the extent that the Fed still relies on a Phillips curve kind of relationship, going forward,
no, I haven't, Lord
is
of
the
North.
natural rate of unemployment a useless concept? How will what measures will the Fed use to judge labor market slack as we look ahead to policy in the coming years?
So I think the way we think about it, of course, the standard way to think about it is it's the gap between the actual unemployment rate and the natural rate of unemployment that matters, right? And the issue really, it's not that framework doesn't make sense, it does make sense. But the issue is that the natural rate of unemployment is very hard to identify with certainty, even in normal calm times. But when there's a violent disruption of the labor market, it can move very substantially. So, and that happened at the beginning of the pandemic. You had the labor market was very much disrupted, and we assumed that the natural rate had moved up, meaning that for any level of unemployment, the labor market is tighter. So we knew that. And I think what was different in this cycle was really that you had to look at things like job openings and quits and reservation wages and just wages overall to tell you that the natural rate of unemployment had really moved up quite a lot. But I don't think it's a problem with the framework, but it is a fact, though, that it's very hard to pin down where the natural rate of unemployment might be when there's this massive disruption in the labor market going on.
So do you think that the JOLTS data, the job vacancies per unemployed worker, that's going to be a lasting measure of labor market tightness for you at the Fed?
Yes, I think people will tend to, for now, people will tend to look at it.
Well, when you tell them you're looking at it, they tend to look at it.
They'll look at it.
I've noticed that.
That's right. I think I would just say in this particular situation, we think it's important. And we're going to find out empirically whether that was
plumber
true.
poopy hands.
For
It was the best.
The reasons I explained. We think that we can see a big decline in job openings and less than you would expect of an increase in unemployment. So this was a unique in so many different ways.
Don't you
This
ever
series
come in
of
my
events was
channel
different from
and
the
insult
one in particular is just that so much
Father
of the inflation
J-Pow,
is due to supply side constraints.
God
which
of
is
the
not a
markets,
feature of the U.S. economy.
leader
for-
of financial
for a long time.
independence for
Well,
Americans,
but Vice Chair
and some Euro
Lael Brainerd Brainerd said the other day in a speech that she
You will
raised the
not
question of whether
disparage him in my
long-term changes
presence.
of the economy, like labor supply, deglobalization, climate change, could reduce the elasticity of supply.
Destroyer
This may
of
be a
gamma.
problem going forward. Do you share that?
printer of calls.
A great set of questions that we've all been thinking about a lot, and Lael's speech was really terrific on that.
This son of a
Iverson
bitch
Parsons
just
has
put
given a
my
couple of
straddle
speeches on the same topic,
$30 in
including
the
one at
money,
Jackson Hole this
okay?
year.
The head of the Bank for International Settlements.
He is a golden
Exactly.
god.
I mean, the question is, is the new normal going to be unlike this normal that we've had where supply side disruptions and constraints were relatively, you could look through them. The lore has been for a long time that you don't need to worry about that, it'll sort itself out, a supply shock from oil prices or whatever. Are we going into a situation a little bit like the 70s where there will be ongoing repeat shocks, and which would tend to put more upward pressure on inflation over time? We don't really know. I mean, it's a great question. But the question, I guess the real question is, if that's true, what are the implications? We still have a 2% inflation target, and we still have to use our tools to achieve it and to keep inflation expectations anchored. But it's very hard to know. It's very hard to know the answers to these things. I mean, we tend to assume things will go back to the way they were, just naturally, but that doesn't seem to be happening so far.
Right, right. Now, you mentioned in your remarks that forecasts of inflation have, not only those at the Board of Governors, but in the private sector as well, have been lousy. Inflation has not behaved the way the forecasters said. So I wonder how you think about using forecasts of inflation and making policy. If you can't tell us, or if your staff can't tell you with some degree of confidence what inflation is going to be 6, 12, 18, 24 months out, how do you think about that in deciding when you make policy decisions?
So I'll say that it is very difficult to forecast inflation now, and one of the reasons is just that the situation is so different from the normal one. And as I mentioned, a lot of it is just that the difficulty is just these supply side constraints that we've had. We had no experience
broke
in
the flip
forecasting
point on
this.
SPX.
This was a case of first impression. So that was very difficult. Nonetheless, we do make forecasts. We'll continue to make forecasts. The way I tried to get around that in my remarks was to say, let's put the forecasts aside for a second and let's try to identify the macroeconomic conditions that we think we need to see that would put downward pressure on inflation. So that's a way to think about it. We'll continue to make forecasts, but we're going to have to be humble and skeptical about forecasts, I think, for some time. And that calls for a lot of risk management. And the other difficulty, of course, is that monetary policy works with long and variable lags, in particular inflation is at the end of that train. And so if you're waiting for actual evidence that inflation is coming down,
trading at a massive premium.
It's very difficult not to over-tighten if that's all you're doing. So
liquidity
we have a
and
risk
the
management
ETFs is just
balance to strike, and we think that
down.
slowing down at this point is a good way to balance the risks of
Slowing down
over-tightening
on the
versus-
pace of rating.
on the pace
Shorts
of
praying to
rate
God that the market doesn't break higher.
But it's still a problem if you can't use today's inflation rate to set policy and you're not sure what tomorrow's inflation rate is. You're saying the inflation forecast will be secondary to the economic conditions that you think are likely to generate more or less inflation. Is that?
Well, first of all, I'm agreeing that it's a very difficult situation in which to forecast inflation, and
Risk off.
really very few professional forecasters have gotten it right. So I think we'll look at various things. We'll look at our forecasts. We'll look at the actual data. We'll look at, I gave you the three pieces and the elements of those three pieces of core inflation that we're looking at. We will, look at these macroeconomic conditions. Where, for example, we will try to identify a level of a stance of policy that's sufficiently restrictive.
This guy's like a
inflation
human
down.
whoopee
We can't
cushion.
identify that with great precision and confidence, but we'll look at the changes in financial conditions and the effects that those financial condition changes
4K
are
has
having on the real
arrived.
economy. We'll look at all of those things and make.
Thanks,
a
Papa
judgment.
Powell.
It will have to be.
I knew you had one more run in him.
As to what what that is.
Well, when you think you've talked frequently about the need to have policy restrictive, and that often is used as the definition of restrictive
I
is
also
above
arrived.
some neutral rate of interest,
not
the one
alone.
that will prevail when all is calm. And you gave a speech at Jackson Hole a number of years ago pointing out how identifying all these things, the natural rate of unemployment, the natural rate of interest, the problem is that we don't know what they are. So how will you know when policy is restrictive? How do you think about what the neutral rate is under the current conditions of the economy?
And the answer to that is that there isn't any one perfect summary statistic. So the way I think about it, and I think the way we generally think about it is, we make our policy changes and they affect financial conditions. Actually, it works the other way around. Financial conditions tighten in expectation now, different from what it used to be. So they tighten. And so we monitor the tightening of financial conditions. We look at the history of these financial conditions index and we ask how tight are financial conditions. We also look at the effect that tighter financial conditions are having on the real economy, particularly now interest-sensitive spending, but also other things as conditions tighten. We also look. So, what are the financial conditions we look at? We'll look at the entire rate curve. If you think about risk-free, the Treasury rate curve, we'll look to see significantly positive real rates across the curve, and you have that. You can argue about the short end, but you've got to pick some sort of a forward-looking reading for inflation, and I think inflation compensation in the markets definitely reflects confidence in us bringing down inflation. So you've got real rates really across the whole yield curve. You also look, though, at credit spreads and what are private companies borrowing at, because most borrowing doesn't happen at the federal funds rate. It happens in many other places. We look at asset prices. We look at exchange rates, which are just another asset price. We look at all those things, and we try to make a judgment about whether looking at, put some weight on the real interest rate curve, some weight on the other aspects I talked about. I think you have to make a judgment at the end, though, that you're restrictive.
So an estimate of the neutral rate of interest didn't seem to be one of the big factors in that list you gave?
No, it's in there. It's in there in looking at the real rate curve. So you look at the real rate curve, you'd want real rates to be above what we'd estimate as the longer run neutral rate. Mm-hmm. The issue is, the longer run neutral rate is a rate at a time of full employment and 2% inflation and the economy and
I didn't turn that on.
That isn't where we are.
Yeah, I noticed. Can I turn to the balance sheet for a minute? I'm going to turn to questions from the audience in a minute. What criteria are you going to use to decide when to end the shrinking of the balance sheet? Is it the economy? Is it whether money markets are functioning well? Is it whether the Treasury is having trouble raising money? How do you decide when you've shrunk enough, when you should end the shrinking?
So I should refer you to a document that lays all this out in detail that I really should be reading to you, but I'll paraphrase it.
Thank you.
If I don't get it exactly right.
No one will pay attention if you don't get it exactly right. Don't worry about it.
Pretty much wing it.
Relax.
So we're in an ample reserves regime, and what that means is that changes in the reserve level will generally not affect the federal funds rate. So
Jesus Christ,
more than
Upstart's going to break the gamma flip
reserves in the
point.
system. So we're not close to reserve scarcity. So what we said is that we would allow reserves to decline until we're somewhat above the level that we think is consistent with an ample reserve, with scarcity.
Right.
And then for a while, what you do is you hold the balance sheet constant, and non-reserve liabilities grow while reserves shrink. So we sort of shrink gradually down to that. And then at a certain point, we're just going to call it. We're not looking to really go back into proving that they're scarce, because what happens is, and you saw this back a few years, the demand for reserves is not stable, and it can move up and down very substantially. So we want to stop at a place that's safe. You know, having a lot of reserves in the system is really a good thing. It's really a public benefit to have plenty of reserves, plenty of liquidity in the markets and in the banking system and the financial system generally. So that's how we would do it.
In the minutes of the last FOMC meeting, it said the staff had a forecast that it forecasts below potential growth, but not a recession. But then there was this interesting sentence where the staff said the possibility that the economy would enter a recession sometime over the next year is almost as likely as their baseline forecast. Is that how you look at it?
So I have resisted the temptation to handicap it.
Go on.
I think I'll continue to do that. But I get the way I think about it is I do continue to believe that there's a path to a soft or a softish landing. I do believe that. And
the definition of a softish landing is what? Unemployment goes up a little, but we don't have a recession?
Yeah, unemployment goes up, but it's not a hard landing. It's not a severe recession. You know, you could think of unemployment going up, but not really spiking as it does in some recessions. So that's how I think about it. And I think the path is pretty clear. The labor market conditions soften. We see inflation and
this is what Jay Powell's like at parties,
services inflation gets better.
Just sitting around saying bullish shit to everyone.
Go into recession, and you see inflation start to come down. And I mean, I think that's very plausible. I don't want to be the handicapper on it. And of course, our job is to try to achieve that. Mm-hmm. And I think it's still achievable. Although, if you look at the history, it's not a likely outcome, but I would just say this is a different set of circumstances.
Well, you said at the last press conference that you thought the path to that soft landing had narrowed. Has it continued to narrow, or is it widened, or I don't know if you can have a wider soft landing, but...
I don't know that it's changed since this is what, 5-6 weeks ago. Yeah. I was asked the question, has it narrowed? Is it still possible? And has it narrowed? It's definitely still possible. And it has narrowed because if you look over the course of this year, nobody expected us to raise rates this much. No one expected inflation to be this strong and this persistent and this, to have spread so broadly through the economy. And so to the extent we need to keep rates higher or keep them higher longer, that's going to narrow the path.
How high would Upstart have to go for you not to roll December calls?
Data, and we get evidence that all the things that I talked about, if all those things start to swing the other way,
go up a lot.
Then we could very much achieve this.
In August 2020, you announced a new framework for monetary policy, the flexible average inflation targeting framework.
Yeah, shop's running pretty hard.
I wonder
right
whether
now,
there's anything in that you think we should be rethinking now in light of the recent experience.
Well, my December 450s are back.
Do another framework review in 5 years. And so that would be to bear fruit in 25 or 26. So that's what we're going to do. We're going to stick to that.
Christ.
I think we need to see this through a full cycle. We need to see the other side of inflation and what the economy looks like after
Neo's
this
very, very
episode
liquid.
to really make good judgments about that. I will say, though, that aside from the framework itself, we implemented it through guidance of various kinds. And we put in really strong guidance because there were a lot of doubters that we would ever achieve 2% inflation, if you remember. That was the main criticism. Little did we know. But one piece of guidance that we gave was, and I don't think this had anything to do with or much to do, let's say it that way. It didn't have much to do with all this inflation we're experiencing. But the one piece of guidance that we gave that I probably wouldn't do again is we said we wouldn't lift off until we saw both.
So those March puts getting wrecked? Not much. I bought a lot of them at this price range already.
I think
so
it's
they're not
the tail
really
risk. We tend as human beings to underestimate tail risk, and I think we didn't think. It seemed so unlikely. If you remember, 25 years of low inflation.
Right.
And many years after the pandemic, after the global financial crisis of inflation everywhere in the world, it's all disinflation. Just didn't seem likely.
What's the flip point on
So
Upstart?
it turns out that when you
it's at
invite the
19.
chairman of the Federal
me
Reserve
look.
to speak at Brookings, a lot of people email you questions. Most
Really?
of them are questions I've already asked or questions that were so poorly framed that I couldn't even understand the question. But somebody asked me this one, and so I want to give that person an opportunity
It's
to get an
at
answer.
17.
What do you like to do in the morning before you
But
start
we
work?
need to cross. Well, We needed to cross 19 to start really
No,
moving. And now that we're past it, it should get kind of spicy.
I read a bunch of
We want to move up a
and
little
drink my
more
coffee in
past
peace, and then
19, but yeah,
That's what I do.
And now that you're chair, do you still ride your bike to the Fed?
Some, yeah, some. I ride down. Well, I won't tell you where I ride, but I do.
Yeah.
I ride.
The security guys thank you for that.
They're
Yeah.
like, no. Yeah.
Okay, so here's the deal. We're going to take questions from the audience. You need to wait for a microphone to get to you because we have a lot of people online.
yeah,
You need
still
to
my
say who
upstart
you
calls.
are, and you need to remember that this is not an opportunity for you to make a speech or tell the Fed what it should do. It should be a question. It should be short, and questions end with a question mark.
Oh, what do you think of Upstart?
Come down here. Want somebody, Joe, and then Jonathan?
Thank you. Joe Beaulieu from Brevin Howard. So you've spoken both about risk management considerations and the inherent danger of inflation becoming entrenched. So I was wondering, how much do risk management considerations suggest a terminal rate higher than would normally be expected to achieve your policy goals?
So I think there are a number of dimensions, and it wouldn't necessarily, one of them would be potentially higher rate, but more I would think one risk management technique is to go slower, right? To go slower and feel your way a little bit to what we think is the right level. Another is to hold on longer at a high level, and not loosen policy.
What
too
puts more
early.
pressure? Jan near the money calls.
I don't want to over tighten. Certainly, my colleagues and I do not want to over tighten because
Out of those three.
I think that cutting rates is not something we want to do soon. So that's why we're slowing down, and going to try to find our way to what that right level is. But theoretically, it's another dimension, but it's not. It wouldn't be my first choice.
Thanks. Jonathan?
Hi, thanks. Yeah, Jonathan Pingle with UBS. So I had a question about the
Pingle?
imbalance between labor supply and labor demand. One of the things that's a little obscured when we look at and discuss the labor force.
It's been nice knowing you. I just want to say thanks for all you've done for us before you're gone. Happy Moana.
So when you think
A
about
little early, man. We're just at
realigning
$19.20, but thank you, Tim.
Are FOMC officials hoping or expecting that participation really moved back up all the way to a pre-COVID peak? And related to that is, the follow-on question, how much of the realignment do you think needs to be done through restricting labor demand as opposed to the ability of supply to catch up?
So, on labor force participation, I think it's useful to go back, 10 years, and the forecast that mainstream labor economists had was that, and you're right, aging of the population leads to declining labor force participation. Notwithstanding that, labor force participation was in effect flat and a little bit up from 2013 to 2020, roughly. And that was because you had a strong, tight labor market. People were staying in the labor market longer than expected. That was really what it was. So our ability to predict is not perfect in this, except over long periods of time, you have an aging population, so you're probably going to have declining labor force participation. I don't think it's reasonable to expect that we get all the way back to where we were with labor force participation in 2020 at 63.7, I guess, population adjusted. I don't see that, but I wouldn't rule it out. And we're nowhere near that now. We're 1.5 points below that now. So the real question is, do we expect to see big chunks of labor force participation? I got to say, this year we've seen
Upstart's
in the aggregate
spread
how much.
at the money has
And
moved up to
very
like 4 or 5
disappointing and
cents.
a little bit surprising. So that's part of the story. The other part, as I mentioned, is population. Is that the labor force, a big part of the shortfall.
It doesn't matter because we've moved above where they started
given
internalizing
population
today,
trends,
right?
Given that there's still
So now their
some
inventory
workers
is
are
at a
clearly anxious
deficit.
about going to work during COVID. and
So it
given that
becomes harder to
immigration is well
internalize. We have
below
an
the levels
MM
that
hedge now
were projected
pressuring the
before
upside.
pandemic, does most of the balancing have to come on the demand side?
And the spread is
For
widening at
now,
the money,
we
which
have to
means that
assume
price
We have to
movement to
assume
the
that.
upside is
That's why I
accelerating.
talked about supply side policies on labor, but although they're not for us to recommend
Sorry,
or to
I
answer questions
missed
about.
that.
Noted, please.
So yeah, the answer is yeah. I mean, that's what I kind of said that in my speech. We have to do what it takes to restore balance in the labor market to get back to 2% inflation. That's what we're doing.
I need to know just how
Really
much
just by
cocaine is
slowing
being done in the
growth,
upstart
job
shorts
growth, rather
offices.
than
Their eyes
level.
becoming
Okay,
increasingly bloodshot as their booth holes stretch to maximum capacity and beyond.
Thank you, Joe
Maybe.
Daniel, Peterson Institute. Chair Powell, back in 2018, you gave a speech questioning the role of the so-called star variables that the Fed uses to navigate. And there was this possibility raised that maybe unemployment could fall well below what the staff thought the natural rate U star was, then without causing inflation. But then COVID came and turned everything around. And as you just said, one interpretation of COVID is that U star went way up and we were on the wrong side of it, which is inflationary. My question is, going forward, is it likely, do you think it's likely that things could reverse as the dust settles from COVID and we could end up back
Who's
in that
this
world
fucking
where maybe,
economist guy?
we're on the
J.
other
Powell is
side
a
of
lawyer.
U-star, we don't know it. It's
Stop
hard to
asking
tell.
him your
What lessons
economy
did you learn
questions.
from that period that got forgotten
None.
because of COVID, perhaps?
Well, unemployment went
Fucking
below so what we write down and what the staff writes down is a longer run U-star, longer run estimate of the natural rate of unemployment. I guess one thing I would say is that during the course of a long, relatively gradual, I mean, so we only have one experience, right, to generalize from, but what I learned from that experience was long, relatively slow, not super fast.
Are you full bull
expansion.
until December
We
now?
really saw the natural
No.
rate of unemployment.
We have
the
PCE
shorter-term
tomorrow. It
natural
could
rate
ruin
come
everything.
Way down. We had 3.5% unemployment with really little sign. Wages were just getting up to that level of productivity and 2% inflation. So we could be back in that place. I think we could certainly be back in that place. But what we've seen, you know, it's another N=1 situation with the pandemic. It's also unique. I would also point out, though, we did see the inflation we saw at the beginning. We did have natural rate of unemployment go up probably significantly. But again, the original inflation we saw was not to do with the Phillips curve, with the labor Phillips curve. It was not to do with that. It was to do with goods more.
So I think another way to frame Joe's question is, I think a lot of us thought that the lesson we learned when unemployment fell very far and we didn't get inflation, that maybe over time, before you were in charge, the Fed was erred on the side of being too tight, that it was too worried about the unemployment rate falling. And I think the concern is that, will we fight the last war? And because of this experience, the Fed will be reluctant to experiment with a low rate of unemployment in the future.
I'd love to have that problem again, if we can get back to, you know.
Okay, so you got like 3 years left in your term. Do you think you can pull this off in the next 3 years so we can run the N=2 experiment?
Absolutely. Yeah.
Claudia Sam?
Claudia Som Consulting. So the question I had is, we've had unexpectedly fast and large rate increases this year, and that has pushed up the dollar relative to basically any currency in the world. We've seen likely more financial market instabilities. So the Federal Reserve's dual mandate is for the United States, and yet are you worried that a severe global recession or financial market turmoil would come back to make it harder for us to achieve the U.S. dual mandate? Thanks.
So we do, of course, look at global developments. We have a domestic mandate, of course, as every central bank does. But in this world, global financial markets and the global economy really matter for us. So we monitor all that very carefully. We really think, and my colleagues and I really think, that the best thing we can do for ourselves and for the global economy is to get inflation under control as quickly as possible. We don't think the world's going to be a better place if we take our time and inflation becomes entrenched and then we have to go in later. The evidence is that the employment costs of bringing inflation down only rise with delay. So at the same time, we don't want to do any more than we have to do, but we feel like as a risk management matter, we needed to do what we did and feel like we're now in a place, again, as I said, where we can slow down and try to reach that ultimate level.
But how much do you worry about, I think what Claudia's question implies is, we do something with rates, other people are forced to do things with rates, and that ends up spilling back to us and makes it harder for you to do it. So you have to take that possibility into consideration.
We absolutely believe that we take that into consideration. The model's explicitly taken into consideration. Of course, they're not perfect. No one would say we do it perfectly, but I mean, we have a very large global model that we use for the global economy, and it absolutely takes into account what's happening with the real economy and monetary tightening and currency and all those things. It won't be perfect, but we do that. And we also sort of understand generally that there's a lot of research and things, people are talking about this a lot right now, that, maybe the whole is bigger than the sum of the parts when it comes to tightening. Maybe it is, maybe it isn't, but we're aware of the risk of that. But again, I come back to, look where we are. We've raised, 375 basis points. Markets are working.
Spreads widening even more.
We're now in a position where we're in a place where we really can get inflation under control, and unemployment's at 3.7%. So I don't regret getting to where we are, and I think broadly the world will be better off if we can get this over quickly.
Thanks. Julia? Julia, stand up so the mic can find you. And can you bring a mic down here to...
Oh, God, the shorts are so
Can I
fucked.
2 questions?
If they're short.
Yeah, very short. So one question on the labor market is, how do you reconcile, the characterization of the labor market as very tight with the fact that wage growth isn't keeping up with inflation and the labor share of GDP really hasn't risen since 2020? And then second question is, how much credence or what kind of research do you rely on to think about the notion that a very tight labor market will lead firms to invest in and innovate and become more productive over time? Could that be a tailwind to productivity growth?
Do you think it's a good idea to exit upstart Jans and re-enter tomorrow after a pullback? Also, do you think SPY comes back below 4K by end of
the
week?
labor market is tight, but wages are not rising.
It could, yeah.
Inflation.
I mean, we have PCE
the
data
labor share
tomorrow,
of GDP,
so
which has been depressed for
there's some
some
serious
time,
risk.
hasn't really started to rise. So how do you put that into your thinking?
So naturally, we understand that real wages are not going up for most people. But to me, that isn't that's true, but it's not really dispositive. I think the issue really is that it's one of salience, really. So at what point do people start saying, I need higher wages because,
every
real
green
wages are going
candle
down.
on the
You're getting these
SPX
6%
right
wage
now
increases, but inflation is
represents one
7.7%.
bullish
I need
thing
more of that.
J. Powell has
we don't
said.
really know when that point is. But when you get to that point, you're in serious trouble. And we don't think we're at that point, but it can't be that we can go on for 5 years at very high levels of inflation and that it doesn't work its way into the wage and price setting process pretty quickly. So that's a serious concern. So on the second question, yes, I think we're seeing that. You're seeing the service industries. You're going to see, this labor shortage that we have, as I mentioned, it doesn't look like it's going away anytime soon, and that's absolutely, I think, certain to lead to a lot of investment in technology and labor replacement technology where there isn't labor, and I think you'll see quite a bit of that, and could it be a dividend going down the road? I would think it'll have to be to provide the services that the public wants to buy.
Thanks, Mike Feroli, J.P. Morgan. So you spoke about going somewhat restrictive and then staying there for a long time. Why would you prefer that over a shock and awe approach that goes very restrictive but for a shorter period of time? And I ask that because there's some evidence that sacrifice ratios are lower.
I ask that because J.P. Morgan has a bunch of puts.
I think we've been pretty aggressive, I would say. No, I don't. I don't agree. I mean, we wouldn't, to just raise rates and try to crash the economy and then clean up afterward. I wouldn't take that approach at all. I think we're in a position where the right thing to do is to move really quickly as we have, and now slow down and get to that place.
My upstart puts are down 50% in 1 hour.
Uncertainty around that. We have a broad set of thoughts about where that destination might be, but we could be wrong. It can be higher than that, could even be lower than that. We'll have to see. But I think that's the right approach, and that's also the approach that it would allow us
Man,
not to
that's
throw away
bullish.
the option value
Yeah.
of upending a lot of lives.
Okay, all
which we
right.
would do if we crashed the economy and we might get rid of inflation, but at very high human cost.
There's a question in the very back, a woman in front of the camera. Do you want to stand up? Thanks.
Thank you so much for seeing me in the back here. Nancy Marshall-Genzer from Marketplace. Just wondering, Chair Powell, is the Fed in danger of neglecting its maximum employment mandate?
SPX GAX,
Is the
I don't know. I
maximum
have this
employment mandate
shit
taking
open
a
right
back
now.
seat to the stable prices or inflation mandate?
No, absolutely not. Absolutely not. The thing is this: without stable prices, we
Did you
can't
read
have
my
maximum
Ko-fi?
employment. And that's how I think about it, and I think my colleagues as well. In the sense
No,
that
because it's-
if you're constantly fighting
look
off
at anything right
inflation
now.
and having these battles
And you got
having to raise
censored.
rates, and it goes on for
Why can't
5
you
or
just
10
not
years
use
as it
curse
can,
words in your
you're not gonna have
Ko-fis?
maximum employment. The situation we would love is to have another one of these very long expansions, and we've had 4 of them now in the last several decades. Really, when inflation was low after the 70s, we got out of the habit of these short inflation-driven
That man must have
business
the
cycles.
fucking
And we were
thickest,
able to reach, you
meatiest,
saw, we were
probably
3.5%
perfect cock and balls in the world.
Those are really
There's no
good
way he
for,
could just sit there,
very
basically in a
beneficial to our
recession,
society to have these
and
long
do that.
expansions and the
Take a
benefits
bow,
start to go to
J
people at
Pow.
the lower end
You're
of
the
spectrum
fucking
in
man.
the 7th or
He
8th
really
year of the
is. Yo,
last
when's this
cycle.
fucking
So
upstart
I
dam
think
gonna break,
the two things
dog?
go together.
What the
Right
fuck are
now,
they
the
covering?
labor market is
Anything.
incredibly strong.
This is getting
Before
silly.
this
Yeah,
thing,
they're
we've never
getting
had
super fucked is what's
1.7
happening.
job openings for every unemployed person. So this is a great labor market in that sense. It's too great in a way because it's going to be adding to inflation.
We have time for one more. In the back, the gentleman on the aisle.
Why did that get censored?
All right,
I
two
have no
questions.
idea.
Two gentlemen on the aisle.
This is an
Keep it short.
opportunity to roll my upstart 1230 $25 calls or a good reason to hold them.
South China Morning Post of Hong Kong. So I would just like to ask a question.
Could be a good
related to
opportunity
Chinese,
to sell them or a
so
great, I don't know.
right now,
That's-
a lot of analysts
tough,
are
man.
arguing or believe that China's zero COVID policy is continuing to take a toll on the Chinese economy, but also likely to weigh on the global economy due to the size of China's market and its position in the global supply chain. So we're just wondering about what impact or how much impact do you accept that continuously slowing Chinese economy would have on the U.S. economy or the Fed's next interest rate moves? And is China's current economic situation a disinflationary factor or a inflationary factor to the U.S.?
Is this guy one of the
I just have to say
fucking
that to the extent China's having
CCP
shutdowns,
moles we were warned about by the
parts of the country
DOJ?
and the parts of the economy that are deeply
fuck outta
connected
here,
to global
man.
supply chains, that's going to make those supply chains less efficient, less effective, and so that will have an effect on the prices of some of these goods that are manufactured.
Talk
or
about
assembled in
China's
China.
failing
So
economy
it does have
today.
an implication for the U.S.
Trying to make money.
It's hard to say how big that will be without knowing how persistent, how long these lockdowns take place for.
And the gentleman behind you.
Thank you. Evgeny Shego with Public Citizen. I was wondering how you think about the trade-off of restrictive policy and the supply constraints you mentioned. So in particularly when it has negative effects, say, on housing production that makes it harder to meet housing demand, or on the
Ask something
congressional
bullish, for
investment
fuck's
through the
sake.
Inflation Reduction Act in
Everyone's
climate change
just got
mitigation
puts. That's
and
the
in energy
problem.
policy that will make energy cheaper long term.
You
How
can.
do you
This
think
guy's
about
like
that
about to
trade-off?
cry because
Yeah,
he's
I
got
don't think
puts at
our
39.50.
Restrictive policy would have much of an effect on the sort of climate mitigation investments you're talking about. In terms of housing, that
You hear his voice
there are two
breaking.
things. One, there's sort of a longer run housing shortage that we have. But in the meantime,
Mr. Powell, hi, I'm with JP Morgan.
Coming out of the pandemic,
We have
rates were
$6.5
very
billion
low. People wanted to buy
short the
houses. They wanted to
SPX
get out
at
of
3,900.
the cities and buy houses.
We
in the
were just
suburbs
wondering
because of COVID.
if you could say
And so you
something
really had a
slightly
housing bubble. You had
negative.
Housing prices going up at very unsustainable levels and overheating and that kind of thing. So now the housing market's going to go through the other side of that and hopefully come out in a better place between supply and demand. But none of this
Oh,
really
great.
affects
Now
the
he's fixing the
longer
housing market,
issue,
too.
which is that we've got a built-up country, and it's hard to get zoning, it's hard to get housing built in sufficient quantities to meet the public's demand.
So I want to thank you, Chair Powell, for being generous with your time, and thank you all for coming in. I want to appreciate everybody asked a short question, which is, that's the first time in my experience in 8 years in Brookings that's happened. I'd like it for all of you to stay in your seats for a minute till the chairman can leave safely. And if you have paper at the coffee cups or something, take them to the back of the room and dispose of them. So thank you very much.
Why the fuck would you include that statement in the filmed interview? Dear God. It's like if you guys could dispose of your coffee cups in the back of the room. It's because they smell, they're full of shit because all those analysts just shit their pants. Bears in shambles. Fuck bears. More up. Let's hit 40-50 today so I can sell my calls. Did you guys see what happened when they all closed their puts? That shit was crazy, right? Just straight up. It's so fun. So many downside gaps. I'm start printing new FTDs like JPAP printed dollars during COVID. Yeah. What's funny about this upward push on GME and Upstart is it's tanking liquidity in their ETFs. So they're trying to manage the upside price movement with their ETF liquidity before they both break through gamma neutral and fucking the market maker starts hedging against them. If the market maker starts hedging against the short positions, they're fucked. Like, fucked bad. It's not a good position to be in. The speech he read was released before I think it started. Like they hand out a copy of the speech to the press, so that's why it started rocketing before he started speaking. They all get copies to like pull quotes from and shit. Well, what's even more exciting for Upstart is they're talking about stability in the rate increases, which is what Upstart needs to be a profitable company, right? All's selling off now. They might be. I should probably consider rolling some stuff. I'm gonna buy these gens before I close the Decembers. That way the pressure stays on. Sorry, that's kind of loud, huh? Apologies. Does this run hit the upper trend for SPX? Yeah, pretty fucking close. It doesn't matter. All this positive gamma in the money is gonna feed back, right? No, I'm not selling any covered calls. Ugh. Mm. So what I'm doing is I'm buying the Jans first and then selling the Decembers. That way the delta stays hedged. Or at least that's what I'm trying to do. Why would you change your mind with in regards to selling GME CCs today? I mean, there's no real spike in implied volatility. I'm not selling Upstart covered calls. GME, I may still sell some. They're not worth much. Hmm. Dude, these fucking Neo calls. Hold on, I gotta sell off this SPX straddle. Yeah, I know. Upstart's Ivy's getting crushed probably because a lot of people are, well, it might be because I'm repositioning. I honestly don't have that many December calls. Of my 20, like, 200, 2,300. How many? I don't know how many I had over here. Maybe it was still like 2,600 calls. I think only like 700 were for December. Nice, pure mayhem. Did you say there was potential bearish news tomorrow? There's PCE data tomorrow. But if the price index is down, that's just going to be more bullish news. But that's one of the Fed's primary indicators of ongoing inflation. or preliminary indicators of ongoing inflation. Did speech change anything for you in regards to near future positioning? No, I still expect December can be pretty bullish, at least into the end of December. Most of my like far dated puts were bought around this level anyway, so they're not, I mean, they've lost a little bit of theta, but they're not very red right now. They were up earlier today, so I'm not super concerned with those. I may buy some more before the end of day today. Like I may get into more of those December 30 puts. Like the nearer the money ones, 3950, 3900. If we move up more tomorrow, that might be an opportunity for me to get into 4000 puts. With a little bit of time. I kind of want to get into some like a little bit of NDX around the like 11.8 level, 11.850. For late December, and then possibly more in March, maybe around the 11.5 level. 11, yeah. 11 and 11.5. How does OI look on SPX? Decent. There's, I mean, the 4000 and 4050 and 4100 positioning didn't really weaken a lot, right? On the drop. Most of that was a little further dated towards the end of December, middle end of December. Did you say like 30-40% loss on the GME December calls? Yeah, about 20, well, depending on the strike, but like 20 to like 60% on the further out of the money ones. Most of them were around like the 30, 28, 32 range. The concentration was really clustered around like $28 to $30. I didn't sell. I mean, I only had, like I said, I only had like 600 or 700 December calls for Upstart. There wasn't very many. And I bought an equivalent number of January calls before closing them, so I don't. The delta should be fine. It shouldn't have affected delta at all. It might have dropped IV on the December 16s a bit, but not a ton. The dropping price is having way more of effect than my repositioning. Okay, OG rules. You've set SPX to 4K every day this week. I'm glad you're finally right. But don't act like it was a prediction. You don't need to time him out, Carl. You drop your Neo? No. I probably shouldn't hold it into tomorrow, though. I think it's at about a 20% loss. 30? Yeah, I'll just close it. You gotta expect some profit taking on a move that big, right? It's just no fucking way that there wasn't gonna be some. Is there a strike even worth selling Jamie covered calls at for Friday? Jesus, $5 a... Not really. I don't want to sell them into earnings. They're much better for next week, but super risky. Yeah, fuck that. Yeah, I'm not gonna sell Jamie covered calls today. It's just not worth it. Sell them in the money. No. Are you gonna get head and shoulder out of the profit taking? We may just get a rep. There's still a lot of OI at 40.50. Well, if I sell 1,600 calls at 30, I'll get 4,800. It's just, yeah, it's like $4,800. And I'll probably not even get that much. You'll just prevent the price from going over 30. I'd be selling them for Friday. If I sold them out, I'd get a lot more money, but I don't want to do that. Yeah, it's really not. The risk isn't worth it. June's should have better liquidity than Feb or March. But the strikes are fairly limited. There's just not a lot. The OI's better though. For anything out of the money, you want like Jan 24s if you really want to give yourself a lot of time. Like Jan 24s are where the good, like the fairly liquid strikes are going to be far out of the money. End of day December puts 3900s. I have some 3900s for December 30th. I also have 3600s for December 30th. Yeah, they're not terrible. I mean, it's not a very big drop from here, right? It's like a 200 basis point drop down to 3900 roughly. Which, could be met on SLD alone. My calls got wrecked on Upstart today. Really? I got out way better than I would have gotten out yesterday. On the Decembers at least. Yeah, the April shouldn't be too affected by the IV crush. For everything I have learned, the data you offer help me to play and react to changing conditions with greater precision. Thank you as always. No problem, man. Congratulations, dude. I don't know if SPX breaks up here though, my 60-cent 0DT is gonna print like a motherfucker. It's ridiculous that this contract's up 80% already. You don't think Jan calls seem to be too far out still? Jan 2023 or 2024? Yeah, no, I mean, if there's a deferral in place, I don't think it's happening today. It could still happen before the end of the day, but I'm not gonna take that risk with this like massive midday run up, right? Like what a perfect time to roll and reposition. My exposure on Upstart's the same. It hasn't changed. I didn't sell any covered calls on GME. I have less GME exposure right now. But I don't need call exposure to GME. I have like a fuck ton of shares, right? So it's not like if OPEX happens, I'm gonna miss out on anything. Did you ever hear from that guy who made 11 million on March OPEX? Or did he YOLO and said peace? He's still in the Discord. I haven't talked to him in a while, but he's still in there. I think he's still like a member. He just put it on his Amex Black card and went on with his life. One of the guys in the Discord made like 11.3 million on March OPEX. You know who I never heard from again was that guy who made 3 million on Cat. He fucking disappeared. Back in June. I'm not doxing them. I would never. No, the guy who made money on Cat just went balls deep on the Pickles pick. Like he like full ported into it after he sold his house. I need to know where they're getting liquidity from. Well, most of the drop right here, probably sell-offs in the calls, right? So if the market maker sheds any of their exposure, that's going to leave liquidity. There's always liquidity around. It's just the vast majority of it is dried up. My love, as your doting husband, I want to make sure you are well. I sent you a DM to commemorate the 9-year anniversary of your mother-in-law's passing. I'm here to commemorate by spending the afternoon with you. Praise be to the Lady VWAP. Praise be to the Dans. Riku. Oh, Riku to you too, Darth. Okay, I'll watch it. Did you just rub your nipple at me? I don't know what to do with you sometimes, man. Traditional Dan greeting. Of course, I sold my 1216 upstart calls this morning. Secure. Before Papa Powell? Did you lose faith? Oh, my child. It's okay. Not all is lost. Well, 30% is, but has Fred used this opportunity to escape the hedgies? I hope so. I hope he's well. Do you think Neo's an attractive short? No. SPX might be. Jesus fucking Christ, that rocketed so hard. I don't even think it's done. I think it's gonna move up more into the end of the day. Oof. VIX correlation getting super tight. Are we gonna have enough time? That's just bullish. Jesus, I should have just bought QQQ calls. Or TQQQ. No, he didn't. He's still dancing naked. Fuck you, hedgies. We're gonna get all your attendees. Why did we sell our calls? I don't know why you sold your calls. Well, I repositioned mine. Did you build your PC yourself? Yeah. What are the specs? I have a R9 something. Fuck, I can't remember what it is. 5800X. 64 gigs of RAM. 3880 or 3080 Ti. Try another 2 December 2650s to feel alive more. I guess you could if you want to. Hashtag free frag. But isn't the fact that frag's existence has been brought to light here near the time of our climaxing the most bullish thing ever? I don't even know what Crusader Kings is. I need to get new headphones again. Because these shitty Audio-Technica headphones are broken now. The right ear went out. It's probably because 90% of the time I take them off my head, they just fall on the floor. You quit chewing on the cables. Your chair is likely outside and your door guy is watching it get stolen. You know, that's not funny. I don't know. Okay, so if it's Reg T, they have until the end of the day today, potentially, to cover, right? If it's not Reg T, though, if it's like a 4210 extension, or if it's a fucking SEA 15C3-3, then, you know, you need to cover basically December 7th, from December 7th through December 15th. I don't know what kind I'll get next. I liked these. They were really comfortable. I don't like that they're wired, though. I'd like to get a wireless pair that's comfortable. It's just most of the wireless ones I found I really don't like. Yeah, I repositioned my Upstart calls. I'll buy more on this account tomorrow when the cash settles, but I repositioned. I just moved my strikes straight out to January, so 20, 25, 30, 35, 40, 60, 80, 100, 510. Well, the 510s are for 2024, but whatever. Good enough. XM4, are those the Sonys? Yeah, the Arctis are way too small for my head. I haven't found a pair of Sonys that I thought was even remotely comfortable. Or they're closed backed if they are, and they make my ears sweaty, which is gross. Like these have like big fluffy like velour cooling gel ear pads. I also have like this year. This year has like cauliflowering from when I did jujitsu. And so it like a lot of headphones hurt a lot to put on. Like if it sits on the ear, it hurts like a motherfucker after like 30 minutes. So I need ones that actually go around my ear. I got it drained, but it still got damaged. I mean, it's not a lock, but PCE definitely presents some risk going into tomorrow. because not enough long positions have built up at these levels, right? Since this move up was so sudden, that there's going to be weakness in holding these levels. HD 650s. I have no idea. PCE should, based on the rest of the economic data, I would say that my forecast would be that we see a slight decline in PCE. But it's hard to say because people are still spending. Like, that's one of the harder ones to really get a handle on. It's the price, like consumer price indexes tend to be kind of volatile, and people are still blowing through a lot of money. So like I'd like to think it's coming down in line with inflation, but it may not. I have the M2 MacBook. It's super fast and nice, but I'm returning it because it overheats and it's too expensive. Plus, it's almost impossible to use any monitors that are not 4K. Yeah, I don't know. I would probably never buy an Apple computer ever. Well, any Apple product. I think the only product that they make that's kind of unique in its excellence is the iPad. Like, it's just like the iPad is better than probably any other tablet. Yeah, the Pro. But laptops, PCs, like, all of those are just worse. More money and worse. I mean, the M2 chip's impressive, but it's not worth the cost. Yeah, I don't like earphones that remove ambient sound either. I had some bone conduction headphones that were actually pretty cool for a while, but I got rid of them because they were like they weren't very comfortable to wear for like long periods of time. Yeah, the iPad is genuinely better. The issues with the ARM chips that Apple makes are amazing, but it's locked to their software. I can imagine it'd be a great gaming laptop otherwise. Yeah, I'm not disagreeing. Like I've seen the performance specs on the M2 chip. It's impressive, but at 5 times the price of like almost equivalent AMD CPU, why would I ever buy one? Also, you've got to use Mac and Mac software. Fuck that. I hate iOS. Audio Technica has their ATH WB 2022s, $2,700. Open backed maple walnut mahogany accent. Same padding that you like and wireless too. Otherwise, ATH M50 XBT2 wireless open. Yeah, I think the last time I bought headphones they didn't have those, so I got the MX 700s. I think that's what these are. Say somewhere on them? I don't know. No, they have 3 business days to buy once the funds are settled. It doesn't matter. Carrying forward contracts past today presents a significant risk to Theta Decay if they're out of the money. So, Yeah, I'm gonna roll forward either way, right? And if GME runs and I don't have call exposure, I'll just sell more covered calls. Like that option's always available, right? That's one of the benefits of owning shares of GameStop and not just trying to trade weeklies on it. Same for Upstart to a degree. I mean, I almost have like 25,000 shares now, getting close. I'm gonna take my 3x profits on this stupid call I bought. This is good if you really only like being able to use it as a comms and not be able to run personal scripts. That'd probably be another problem for me because I use a lot of scripts for IBKR. So I'd imagine those would be much more difficult to port over to Apple. Or they'd have to be just rewritten from the ground up. I don't have 25,000 yet. I'm at like 22,220, I think. Wow, you're serious about it? It's like what I made on SPX over the last 2 weeks. I mean, I have no reason to ever own a laptop, so I don't really care about the benefits of it being a laptop. Right? You're gonna squeeze like Tesla the next 12 months? Probably fucking not. No. Why would it? Why do people keep coming here and asking that? It's like the 30th time somebody's asked me that today. No. Neo not like Tesla. Not at all. Not even remotely fucking close. But Gork, electric car company, same Z's. NDX hit 11,900. Moving up quick. If we test 40, 50 today, I'm closing my December 30 calls. They're not. No companies are same like other companies. That's why they're different fucking companies. Full bull QQQ NDX next 2 months. Ooh, no. That's that's risky. Some bull, but just cause we popped today on a big put sell off into open call interest does not mean that the market's gonna fucking rocket up to new all-time highs. Don't let your bullishness get carried away with you. We're still hurtling towards a recession. All the companies in the market are overvalued with rising rates. We're above the GEX slope on SPX today. The gamma flip point will move up, but we're above it right now. We're above gamma neutral on SPX right now, which probably means we're going to revert back to delta neutral tomorrow. Maybe before, well, I don't know. PCE's in the morning, right? Is PCE at 8 o'clock? Yeah, PCE's at 8:30. I'm going to probably straddle tonight. Yo, Gherk, want to buy some weeklies from me? No, I'm cool, gap filler. Thanks. Has Frank tried to reach out to you before today? Has he been in trouble for the last 9 months? No, he hasn't. This is the first time he's reached out to me. I'm extremely concerned. I'm going to spend most of the rest of the day investigating everything I can about him. Yeah, broker data's fine. Fidelity's got plenty of resources for looking into all of that. You don't need like a fucking terminal or anything. How can I follow what you talk about with SPX using SPY instead? You can't? They're not the same. They're similar, but not the same. There's arbitrage between the two of them. They both track the S&P 500, right? But positioning on them is not. Positioning on SPX is more in line with futures, and it doesn't have an underlying, right? So it's very directed by its options positioning, whereas SPY is mostly used for hedging. And so its consistency in moving towards levels of higher interest is different. Over a long period of time, they'll mostly track. XSP is fine for swing trading, but the spreads are too wide to trade it intraday. What did you think of buying rev shares at this price? If they're bought out, wouldn't we at least see a 10x in the current price? I don't know what rev will get bought out at. I don't know what they'd agree to, but I would say potentially, yeah, $10, somewhere between. I mean, yeah, I can't see them accepting an offer very much under 10, honestly. They would need to get more. Like, I don't think Perelman would sell out at those prices. Since I survived the wager can bury the hatchet now. I'll stop harassing smug Discorders, but I'll never stop being me. Deal? Oh, you're good, man. I was just fucking with you anyway. My plan was that if GME ran 20%, instead of banning you, I was gonna force you to change your name to Gherk is always right because he's the composite man. But I was wrong, so. Well, I was wrong unless we rip into halts at market close. I don't think that's gonna happen. But I'll be really angry if it does. I sold CC on Shop yesterday. I think it'd retrace. Thoughts on selling a further DTE on Shop at a better strike, and then closing out this one after some time. You could probably pull that off. See, I'm like, you can also, you know, when you have a cover call or CSP that moves, you know, against you, you can just buy an out of the money put or an out of the money call, right? And then when you get exercised, you can just use the cash to exercise, and you only take the loss and the difference between the two strikes. Why is the WeBull candle for daily broken out for the SPY? Is it? How's it broken? Looks fine. I would say if we do get good PCE tomorrow, then I think that the melt up that we've been experiencing is likely to continue. What the fuck was this stock? Just look at Fubo? Yeah, sure. Help, I bought the wrong Upstart 25. I got it for Jan 6 instead of Jan 20. Can you, like, are you up? You should be up on it, right? Can't you just sell it and then buy the right one? If you're up enough to cover the commission. The word you were looking for is drastically against you. I don't know. I guess, yeah. I don't know where he sold the CCs on it. That's moving forward. I can see a retest of 22, 23 near term. I think if we start moving up above the $20 range, it's gonna just start ripping. There's not a lot holding it back at that point. This 40/50s are now up 450%. Wild stuff. Yeah. I should have bought more of those. I had $60 of cash left in this account, so I just got one. But I tripled it. I mean, I wasn't gonna... That seemed fine. I was okay with that. I entered NVIDIA put here because it ripped up. Am I regarded? You got time on it? If you've got time on it, I wouldn't be super concerned. Straddling SPX into close? Yeah, I think so. I get hit with a GFE? It's probably not worth it then. You can always move it another day. Like if you're up on it, you can roll it out and pay the extra for the theta. What strike are you straddling? I don't know. We still have like 38 minutes to market close. So I'd like to straddle 40/50 if we move back in range. Maybe I'll buy puts at 40/50 right now. Okay. And then maybe if it falls back below 40.50, I can pick up the calls. That way I can pick them both out of the money. I can see it. Options to you. What's up, man? Have you de-OPEXed? I mean, sort of. What are PC expectations tomorrow? The forecast is for a drop. I think core is expected to rise slightly, and month over month is expected to rise slightly, and then personal income month over month is expected to drop. Oh, that's personal income. Hold on. Okay, year over year is expected to expected to drop. Month over month is expected to remain stagnant. I can see month over month dropping. Year over year, we should see a downside move. I mean, I kind of agree with the forecast. Like, I could see month over month stagnating or being maybe down a point. It would be a big move. Year over year, yeah, I think it's gonna drop. I don't know if it'll drop 3 points, but it might. Did I miss a frag sighting? Possibly, yes. At a 40.50, I bought for 0.3 before. I got 200% on it, but man oh man, I should have held it. Oh. Yeah, I mean, whatever. Money's money, right? It doesn't... Don't let that fucking get to you. That's not good for your mental health. Do you enter straddles minutes before close, or do you enter leading up to it? Usually leading into close. Like, I'll start looking around now, like an hour before close. Ideally, when you enter a straddle, you want to enter the put and the call out of the money, right? So say your target straddle is right here, like 40.50. You want to enter the puts on the upside. And you want to enter calls on the downside. That way you pay a reduced premium for both sides of the straddle. Wasn't Overstock on Reg Show for years? Yes, it was. Overstock also just had a large naked short position open on it for years. $8:30 a.m. for PCE. So an hour before market open. What do you expect? I'm sorry, covering if Overstock remained on Reg Show for 3 years. I don't expect Reg Show to force covering. I mean, it will, but that's not the expectation for upside price action. What's important about Reg Show is that it hampers their ability to short the stock if the stock runs. I expect the stock to run because they have used tremendous amounts of synthetic liquidity in order to drive the price and volatility down. Synthetic liquidity does not have any staying power. It is fleeting, right? It's only temporary, and then it has to be covered. So when you long short, you can hold on to that short for fucking ever, right? But when you synthetically short, you're locked into a time period. It's transitory, right? And so you've got, at most, you have T plus 5 plus 35C plus 3 days, and then any potential deferral. Right? So That's it. Once that's gone, you have to cover. There's no if, ands, or buts. Your position is force closed. That's why we use that, or try to use that as where we pin our date focus, right? Because there's no flexibility in that. Try as you might, that position will be closed out. Also, the more you short, the more you need to short, right? So, you know, if those positions become overcrowded, it becomes very hard. It already becomes very hard to control price action, right? Because you need to expend so much more capital to drive the price of the underlying down that it becomes no longer worth it from a profitability standpoint. That's why they need the liquidity to come back so they can short again, right? That's the idea, is that, you know, over time, you're profitable on the long short, right? But when you end up on reg show, that hampers the ability to continue shorting. Besides rising pressure of the market, which they've used liquidity to attempt to control, on GME and Upstart both today, liquidity in their largest ETFs fell off a cliff as price rose. So they're using, you know, ETF liquidity that really isn't there. They're guaranteed to fail on it in order to control price action on the market rise today. And they've, you know, it hasn't been very effective, obviously. Both of them are up. And this starts to become a problem, right? So this looks like a tiny move, right? But today, $18, $18.50, $19, $19.50 calls went in the money, right? So that means that, you know, over the next T+2 days, the market maker is going to hedge the upside of those calls going in the money. We're going to see that delta hedge come in. We're going to see the gamma hedge be realized on any calls that now, you know, are in the money. That's going to put more pressure on them to the upside. If the market continues to rise, that's even more pressure to the upside. So you see this kind of, once it starts to move, it starts to spiral out of control very quickly. Say we move up beyond 20 tomorrow, where there's a very significant amount of options interest, or today even, which is, you know, theoretically possible but unlikely. Then, you know, rising prices attract buyers. So then you have, you know, more FOMO coming in, if you will. It doesn't necessarily even need to be fear of missing out. It's just, you know, price improvement, and even the technical levels on Upstart are bullish in this range, right? Because it's in a descending wedge. You know, it's below longer EMAs. You know, so a reversion back to, you know, like the $25 target is attractive to traders, and traders come in, and you know, people who want to just own the stock over the next few quarters because of its, you know, long-term value, are also attracted to prices below $20. And so, you know, it perpetuates itself. And in the meantime, they can't short, and they have no fucking liquidity, right? So how do they fight back against growing interest? It is a feedback loop. If XPX was to drop based on the economic data in the morning, where do you see it going to? It could fall back to like the 39.50 level. It depends on how bad PCE is. PCE could be pretty damaging if it rises. That's because that's a forward indicator that there's another spike in the near future in inflation, right? Well, it's sort of a forward indicator. it would be treated as such. Right now, inflation is trending down, right? It's starting to break down from its peaks. But if there's any indication that there's a reversal in that breakdown, that would be pretty bearish. It has the same potential that GME's run in Jan of 2021 had. Very similar potential. How is your voice so calm? Calm? This melt up's awesome. No, clam. Yeah, I mean, I still have my December 40/50s. I'll probably close them. I don't know, maybe I might have to use them as the other side of my straddle here. Which means I need to buy a lot more 40/50 puts. 40/50s are now at 1500%. Thanks, JPow. Wish I kept all 10 of them. Nice, man. Congratulations. No word from Kendra today makes me think that proves my theory that Kendra is JPow. Interesting. No, I'm not adding the video March puts here. Why are you so impatient? Just add them over time, average them down. There's no rush. You've got like a month, at least a couple weeks before big economic news, right? And you've got a couple months before the next set of earnings. So you've at least got like into end of year. Plenty of time to enter it. Do you consider the minimum amount you have to have in your trading account to trade the SPY? Effectively, I mean, ideally you'd use spreads. If you have margin, you can do it with like 5 to 10,000. And make sure that you have a pretty high win rate. Swinging it, you need more because you need to be able to average down. You need to be able to hedge. You need to be able to average, hedge, and reposition. So you need to be able to... Swing trading's costs more money because you need to be able to reposition. And you sustain sometimes significant losses. Wrong, $7. Like here's an example. Like the 40-50 SPX calls I had today were, well, for December. At their lowest, we're down 43%, or a total loss on the position of $64,000. Now they're up significantly, but yeah. So if you're swing trading, you need to be able to carry sometimes very large percentage losses on your position, and you need to manage that by trading around the price action. So sometimes, if you expect a dip, you need to hedge the downside of that. You need to be able to handle like pullbacks and stuff. You need to be able to reposition if it falls into like a lower level. So yeah, I mean, for scalping the SPY, or just using spreads on the SPY, probably 5 to 10,000. For swing trading small positions, you need to be probably over 25 to 50. Upstart 1 million and Feb calls just opened at the ask. Bullish as fuck or not so much? It's pretty bullish. What strike? $22.50? That's pretty good. Upstart puts keep selling off. This thing's gonna explode. Well, if the hedge flips, yeah, and there's enough out of the money call interest. Later, Effin. Yeah, there's definitely a battle on Upstart with controlling the price with puts. And puts are, if the price is rising, puts are losing value, calls are gaining it, right? So, the weight of the hedge is shifting to the call side slowly, which gives the call side more momentum, right? It's not a good place to be if you're a short. SPX we're straddling overnight, especially given how much we moved up today. Yeah, I intend to straddle it overnight. I may not be able to, just because, well, yeah. I kind of just want to take profits on my 40-50s. I don't want to just use those as my upside straddle, because I don't want to lose value on them. So I may strangle. If it falls below like 40-60 here, but we don't see sub 40-50 again by market close, then yeah, I'll probably just end up strangling. I'll strangle like the 40-60. I already bought the puts, so I have puts at 40-50. Upstart on the daily looks so bullish. Dear Lord. I know. I'm excited too, man. It looks awesome. I'm not trying to rush. I'm down a bit, but I have theta. I mean, keep entering slowly as Sisyphus, just like slowly enter target, upside resistance for your entries, and just build up a position over time, right? Kind of like DCAing but into options. That's really all you need to do to like get a decent cost basis across your puts, right? Is it okay or too risky to sell CCs on GME and Tesla today? GME's risky because if you sell them beyond earnings, you're taking on quite a lot of risk. Tesla, I don't know. Probably okay into the end of the week. GME is just not worth it. Tesla calls into the end of the week might be okay. I mean, the risk you're taking is that PCE comes in good tomorrow and blows up your calls. And I think that's probably a risk that's universal across GME and Tesla. Although I'm not one to talk, I have $150 Tesla calls out for next June. I had better things to do with the money. Would you strangle trash asking for a friend? If it asks nicely. I feel like NVIDIA downside is potentially very profitable for the next couple of months. I agree. I wrote some DD on it. I don't have settled cash, so I went outside to yell go up at my hedges. Okay. Just grab some puts for SPY expiries Friday. How much theta do you typically buy for an SPX straddle? If it's for overnight, generally like 3 to 5 days. Your DD is what inspired me. I know. Awesome. Can you stare into the camera and give us some ASMR voice, please, just for today? I don't want to. You make it weird when you do that, man. Am I banned or just saying too inflammatory things? What'd you say, turd? I don't think you're banned, but I might not have seen what you said. Starting to see a lot of gray names in chat. Where's Bithead? $1 million upstart calls purchased at the ask. Yep, we all know. It wasn't me, I swear. Is it 1 million calls or $1 million worth of calls? You should really distinguish between those two things. They're very different from one another. Why do we always underperform the SPY? Upstart's up 4% today. SPX is up 2.67. Although Upstart's in NASDAQ, which it's also outperforming. Slightly, not a lot. Well, I didn't know trash was going to be so resistant to it. Trash. Look at me. Right in the eyes. I see you. Logic Dustbin, thank you so much, man. Guys, give Logic a shout out for hooking you up with Cornichon. Thanks, dude. Ten people have disliked. Good, fuck them. $1 million in Jimmy puts just traded at 165, 170, 185 Jan expiry. Okay. That's interesting. I can't believe this is my life. Me either, man. Upstart volume building day by day after that crazy low day last Friday. Last call for call buying? Could be. Ah, Revlon. Look at my Revlon calls. The constant reminder that things will be delisted just cause. Is this a good time to slowly start building a longer term market short position again? Yeah, it's decent. I think these price ranges are pretty good. We can go out here and look at the longer term SPX chart, but I think I posted it this morning, didn't I? This can take time to break down, though, right? So, and we can also just break up. If economic news is good, we can break up to like these levels before coming down. And that would put, you know, these shorter dated put range out of the money, right? Like, that would not be beneficial to that positioning. And then you're talking, you know, you're not going to fall down till here. So some mix in this area is probably healthy. You know, some higher range positioning here, some further dated range here, right? Depending on how like the economic news plays out, right? We don't know that right now. We can't. We can make assessments, but you can't predict the future. That's a good ticker to capture a market crash without the ability to buy options. Straight VIX shares? I mean, you can't buy straight VIX shares. It's an options index. SPXS? But yeah, I mean, SPXS. If you can get it low, it's probably really cheap right now. Yeah, but you have to, if they're intraday performance. You can short the SPY. You're still holding GME? Yeah. Why would I get rid of my GME? GME generates income even if the fucking price doesn't go up. Oh, hold on. I think I got some. All right. Looks like a sold straddle upstart $16, $30, 3,000 contracts. Cool. Where's the spam bot? Check TM reversal. No, looks like straddle. I don't think that's a reversal. Reversal is going to be in the money call, in the money put, or yeah. Can you check out Booth the Dix is on Upstart at 6 p.m. today? I can post it. They're gonna make some meatball parm. Any tips on bread? Seeded? Italian loaf is the best. You gotta scoop out the inside. Toast it a little bit before you put the meatballs and the cheese in. Fubo has left the room. It's moving up a little bit. PFE getting spicy. Nice big volume candles. Dan's. Do you ever enter a long position on a red candle? Sure. What are your thoughts on traders who prefer for buyers to prove themselves first? You miss out on a lot of profit potential. There's a fine line between minimizing risk and making money. People who over minimize risk don't ever make money. I know most successful day traders or traders don't make a lot of money. They make, probably slightly above minimum wage for the amount of time they put in. Sometimes your risk management can be too tight. How big is your straddle position for what, SPX? Well, right now it's 50 puts. I don't even have the calls. It'd be nice if it dropped a little into close, but I don't think it's going to. I may have to buy them overnight. I don't know. I have 450 calls, but I really don't want to use. I'm gonna have to use them for the straddle, but I don't want to use them. At least they make money. I think they don't ever get past that point, right? Like they start making, 1-2% a day, and they're good with that. Most technical traders make about this much money. And over time there's some growth there, but very few of them ever learn like proper valuations. They don't know how to manage their money once it starts growing. They spend too much on living expenses, and so that ruins their profitability. It also ruins their portfolio growth. There's a lot of mistakes that can be made once you are just profitable trading. Getting to a point of profitability is the hardest part, but most people kind of give up at that point, I would say. And then, there is like probably like 2 to 3% of traders that do significantly better than that. I don't think that needs to be the case. I think that's just a byproduct of a system which doesn't really have any education built around it. Like there's no like standardized curriculum for learning how to trade, right? Can you give us a specific pointers on how to enter more aggressively in a safe-ish way? I mean, you can use spreads and close the long leg. I mean, I entered Upstart pretty safely, like that kind of stuff where I'm selling like CSPs to build up my long position on the downside, knowing that I'll probably be assigned on the CSPs, but that's gonna be in like an average range where I want my cost basis. And then, if I don't, I've still built up exposure to the long side if it doesn't, stagnate in a range where I'm gonna be more profitable. Fuck me, man. This thing is just not stopping. No, whatever. I've hedged my 40-50 calls. I'll just think of it that way instead of it being a straddle. Jesus Christ. I should average down these puts, though. Is that going to execute? Fuck, it's going to be an after-hours order. Ding, ding. Alright, whatever. So, nice move up on the SPX today. That move can continue if we see a pullback in PCE numbers tomorrow. Some indication with the pullback in PCE numbers reported today with the GDP report. So, although that's a survey, this one, this coming one isn't. So we'll see what the actual data shows. Hopefully, it's in line with the survey, and then we continue to see upside. This upside move on the SPX is going to be putting some pressure on GME and Fubo, but also a lot of pressure on Upstart shorts due to the reg show inclusion and lack of liquidity. If they're going to drag this out longer on reg show, we're going to have to see cost to borrow rise, I think. And based on the amount of liquidity lost in ETFs today, I would say sooner rather than later. This is going to push up the failure rate pretty significantly as price rises. If Upstart breaks the $20 mark, where the majority of call volume is currently located, the MM is going to start to hedge into the short positions. Probably further breaking down any significant upside put positions, which then, once that happens, that starts to remove their ability to short via puts, right? Because they'd be shorting into a market maker hedge that is working against them, which only leaves them ETFs and the lending pool and pre-borrow agreements. I don't think the lending pool is very robust. Based on that spike that we saw, that was a couple weeks ago now, from like 25 to 89, I think the lending pool is pretty slim. Also, there's that looming threat of the share buyback. 35% of Upstart's float is reported sold short, right? And that's without any synthetic liquidity creation. So the potential for a risk off in the long short position is something that's fairly significant and should be noted. We'll see how it goes, but the rising market does not help them. If the market continues to rise through PCE tomorrow, that leaves the market fairly unabated to the upside until we hit the CPI SLD or the CPI data into December. So it's a scary position for them to be in, and they do have a fat stack of obligations, probably like the cash is received, but the securities are not yet purchased. So settled, not yet purchased, which is, that can also create more upside pressure. So everything looking pretty good. I'm excited. Position accordingly, try to get a decent exposure at fairly cheap prices if you can find it. The good thing about today's move is it didn't spike IV a lot, so calls are still pretty cheap. I'm not excited. Bought 4075 SPX 0 GT call for 45 in the final minutes of trading and held through close. Did I win? I mean, you made $300, I guess. We'll see. They still got a lot of potential tricks up their sleeves. They can do shit like start to use foreign dark pools and shorting off exchange. Like they'll pull some shit before they go bust, but ultimately they're pretty fucked, I think. I don't see a way out without significant increase in price. I'll find out what's going on with Frags. Wish me luck. I hope I can reach him. That's after hours. There's probably like, is this like 7,000 volume? It's nothing. Take Freg's shirt off. I'll try. Thank you guys for hanging out. I'll see you all bright and early tomorrow morning around market open. Have a good night, guys. Later.
Kinney's Mayonnaise is a proud sponsor of Pickle Financial, so when you get a hankering for some creamy, delicious mayo after a long night of snorting, sweating, and pacing, grab some Kinney's.
It's yours?
No,
My mother said she found it in your closet.
I don't know. One of the guys must
Must have what?
Look, Dad, it's
Where
not.
did you get it?
Dad,
Answer me. Who taught you how to do this stuff?
You, all right? I learned it by watching you.
Parents who buy weeklies have children who buy weeklies.
Just some pickle fiend fuckers, not a cult, no. Like them AMC suckers, not a cult, bro.
Rico!
Sit, Krian. Sit. Good dog.
Hydrate.
Hydrate.
Did you get any of that?
It's a good show.
Not an advisor. Frigulon.